So let's begin Jan 25 related MTP1 series. In income tax, it's not how many problems you solve. Most important thing, how much provision based clarity that you have. What is the kind of clarity you have on provisions? That is ultimatum. There are some students I know where they solved 150 problems on total income. Past 20 attempts, almost everything. Past 20 years related papers, all that. Still they failed in the recent tax exam, September attempt. Another student who failed already once but not given proper preparation, but later studied thoroughly with provision clarity, has scored 89 in tax. You can see I made a podcast with him. You can see that 89 in income, 89 in taxation. That too, September paper was very tough. You can ask anybody in the September exam, they failed in group 1 only because of tax. September exam, okay, fine. Anyhow, we'll see, through this MTPs, our main focus is on understanding the provision, for which the problem solving is only a byproduct. The solving of the problem is just a byproduct. Wherever a provision comes, that related provision also I will try to discuss. And I hope before this MTP solving, I hope you are clear on the provisions. Have you understood? I mean, have you covered entire syllabus once at least? Yes, yes, fine. There are two ways on how to solve the problems generally. Reading the question simultaneously looking at the answer. That will never give you understanding. Always read the question, have an analysis on it, and see what exactly they made, the step. So that's how you should cross verify. First, you should always analyze the question, take up a call, and then check whether your call is right or not with the given solution. Clear? Now, so we'll begin MCQs, and I hope you know the paper structure, right? 15 marks worth of MCQs will be there in income tax. 50 marks of MCQ will be there in the GST. Now we are covering only income tax MTP. Now 15 marks, 7 MCQs will be of 2 marks each. 1 MCQ will be for 1 mark. Totally 15 marks of MCQs. Now the choice will be given in the descriptive paper. 35 marks is the descriptive paper that you are supposed to attempt, but including choice, the weightage will be sometimes 45 to 50 marks. The weightage of the descriptive paper will be 45 to 50. Total taxation weightage is going to be somewhere between 125 to 130 mark. Total weightage of the taxation is going to be 125 to 130. Out of which some 65 marks under income tax, 65 marks under GST. Out of this, 15 marks for MCQ, 50 marks for descriptive. Out of this, 35 marks only you are supposed to attempt. Correct? Yes, sometimes, may not be, descriptive may not be 50, it may be only 45. Or descriptive may be sometimes only for 42. Anything it can be, that's institute's choice. Okay, there is no specific rule that descriptive paper will come for 49, 50, 45, no specific rule. Minimum choice they have to maintain how much? 20%. Minimum choice shall be maintained 20%. That one which portion? MCQ portion? Only on the descriptive portion. 35 marks plus 20% choice means what? 42. Descriptive paper minimum weightage must be 42. But institute is asking descriptive paper for 45, 48, 49 also. Able to understand? So beyond choice they are giving, technically speaking. Fine. So let's directly solve the first one, first MCQ. Now, Mr. Raja, observe carefully each and every line when you're reading. Process the relevant provision also. Okay. Raja, an Indian citizen, aged 61 years, he is a senior citizen. Okay. Has set up his business in Canada and is residing in Canada since 2009. He settled it abroad. He owns a house property in Canada, half of which is used by him for residence. So he settled in Canada, right, in 2009 itself. Getting it? Half of the Canada related house property is used for his residence, means self-occupied property. Correct? And half is given on rent. Converted rent into Indian currency is what? 12 lakhs, which is treated as let out property. Don't compute anything. Just read the question. If computation is required, we'll compute it. Able to understand? Next. He purchased a flat in Delhi. Just a minute. We have started just 1 minute ago. 15 marks MCQ, right? 15 marks multiplied by 1.8 minute. For every mark we have time in exam time, how much? 1.8, 180 minutes, right? 3 hours. Divided by 100 marks, 1.8 minute. 15 into 1.8, how much? 27 minutes. We should finish MCQs within 27 minutes. From now the time starts. Okay. So now the time is 2:25. Okay. Within 27 minutes we should be finishing this MCQs with proper analysis. Okay. Fine. He has purchased a flat in Delhi in 13th October 2019. In 1920 year he purchased a property in Delhi. He purchased a flat. He has taken a loan from Canara Bank in India for how much? 34 lakh for purchasing this particular flat. The interest on such loan for the financial year 23-24 was how much? 3,14,000. Which year it is? Financial year 23-24. Remember, by default, the exam that you are going to write, Jan 25 attempt, the financial year that is going to be tested for you is 23-24. Assessment year is 24-25, which means the questions will be based on financial year 23-24, nothing but previous year 23-24. So what is the current year interest? It is 3,14,000 for the Delhi property. Now, and principal repayment was how much? 80,000. Principal repayment we get deduction under 80C. Correct? Next. Raja has given this flat on a monthly rent of 32,500 since April 2023, means current year. Since April 2023, he has given the flat for rent on rent of how much? 2023. By the way, he settled abroad at Canada, but then the source of income is in India. Obviously, that income is taxable for income tax, irrespective of his residential status. Agreed or not? Now, what is the monthly rent? 32,500 multiplied by 12. How much it is? How much? 3,90,000. Correct? Yes, 3,90,000 is the rent. Fine. We'll see whether gross annual value information is given or not. The annual property tax of 40,000, which is paid by Raja whenever he comes to India to meet his parents. So property tax is how much? 40,000. He will pay whenever he comes to meet his parents. In 23-24, whether he came India or not, we need to check. If at all he came India in 23-24, he would have paid that 40,000 rupees property tax. And we know very well, municipal taxes can be claimed as deduction only if it is paid. Correct? Yes. Mr. Raja visited India for 124 days during the previous year 23-24. How many days he visited? 124 days only he visited. Which means in the current year 23-24, he has not stayed for 182. He didn't stay for 182 days. B1, basic condition 1, not satisfied. B2, a person who is visiting India 60 days or more, 365 days or more during the past 4 years, that condition will not apply. Condition B2 will not apply for a person who is visiting India. But there is an exception to it. If a person who is of Indian citizen or a person of Indian origin visiting India 120 days or more during the current year and 365 days or more during the past 4 years and having income from Indian sources, exceeding 15 lakh, he is deemed to be again resident. Yes or no? Then B2 condition is applicable. Person who is of Indian citizen or a person who is of Indian origin visiting India. He is only visiting India, not for permanent settlement. He is only a visitor. For him, condition B2 generally we will not apply, but B2 we will modify and apply. 120 days or more during the relevant year 23-24, 365 days or more in the past 4 years preceding the relevant year, and income from other than foreign sources, they say. Actually, nothing but Indian sources. Indian source means which income also included? Indian source means what? Income is received in India. Getting it? Or received in India. Getting it? Or income from a business controlled from India. Or income from profession set up from India. That is also treated as what? Indian income only. All that has to be totaled up and then seen whether it is exceeding 15 lakh. If it is exceeding 15 lakh and 120 days or more stay during the year, he is treated as resident. Correct? Analysis? Yes, fine. Then, okay, so 124 days he stayed during the year. Okay, so they have given information. Before that, he visited India in total for 360 days during the past 4 years. If you see 19, 20, 20, 21, 21, 22, 22, 23. Right now is 23, 24. So 23, 24 before 4 years, he stayed for 362. 120 or more, 365 or more, satisfied. One more condition we should check. Income is more than 15 lakhs or not, we should check. Income is more than 15 lakh or not, we should check. That we will see. Fine. That alone we need to check. Okay. So right now, by the way, is there any other income relating to house property? No other income. Can I finalize income from house property now? Yes, we'll finalize. 3,90,000, right? Obviously, he came during the year, no? 23, 24. Municipal taxes, 40,000 would have been paid by him, correct? So net annual value, since fair value, all that information is not given, rent received itself is treated as gross annual value. This is the net annual value minus 30% standard deduction minus interest on loan. 30% standard deduction, 1,05,000. Yeah. So what is the interest on loan? 3,14,000. You see here, 3,14,000. Since it's a let out property, no limit at all. Only if NAV is 0, the limit has to be checked. 2 lakhs or 30,000, that limit has to be checked. Correct? NAV is 0, when we will do? If it is self-occupied property throughout the year or unoccupied throughout the year, nothing but in the entire 12 months, no letting should happen. Correct? Like that for 2 properties we can claim. Like that for 2 properties you can claim NAV is equal to 0. Correct? Fine. So 3,14,000 I can fully claim, right? 3,14,000. So what is the income from house property? Negative 69,000 in loss from house property. Let's keep this aside. Okay. Next. He had a house in Ranchi which was sold in May 2021. Which was sold in May 2021. Just is there any information we left? Nothing. Fine. So he has a house in Ranchi which was sold in May 2021. He sold it already 21. In respect of this house, he received arrears of rent of how much? 2,96,000 in February. Not taxed earlier. This information is irrelevant. This information is irrelevant. 25A. Irrespective of arrears of rent or arrears, unrealized rent recovered, arrears of rent recovered, whatever it is taxable in the year in which it is received. Flat 30% deduction is available. Correct? So arrears, how much it is? 2,96,000 minus 30%. What is the net amount? 2,07,200. Now loss from one property can be set off against income from another house property. How much is after set off income? 1,38,000. That's it. 1,38,200 is the income from house property. Not yet over. Wait. Next one, Mr. Rajano. He sold 10,000 listed shares at 480 per share of A Limited, which is an Indian company, on 15th September 2023, which means, okay, fine, it's okay. 15th September 2023 he sold, which he acquired on 5th April 2017 at 100 per share. Okay, so 2017 he acquired, 2023 he sold, more than 12 months. It's a long-term capital asset. Correct? So how much is per share value? 100 rupees per share. STT was paid both at the time of acquisition as well as at the time of such transfer. Correct? So STT was paid both at the time of acquisition as well as at the time of transfer. 112A. Indexation not available. First point. It's a long-term capital asset. So now computation of capital gain. What is the selling price? 480. What is the purchase price? 100. So 380 multiplied by, just a minute. Since he purchased on 2017. You should take highest market value as cost of acquisition. What is the cost of acquisition? Actual price 100 or fair market value on 1st February 2018 or 31st January 2018. Anything you can take. Getting it? 31st January 2018 fair market value, whichever is higher. Which is higher? 300. This is the cost of acquisition. There is a logic behind this provision which I explained in a regular class. Okay, even in the marathon also I've explained. There's a marathon of mine. There's a logic why we take. Because until 2018, this amendment comes. Finance Act 2018, nothing but there one amendment. Until before that, long-term capital gain on listed equity shares is straight away exempt. Until the time, long-term capital gain on listed equity shares is straight away exempt. Getting it? 10 subsection 38, there is a section. Now later on, suddenly retrospective amendment they brought. Now onwards you have to pay tax. Obviously government, what they need to do? Thinking into mind, array, what about people who bought before? Thinking gain is exempt. What about people who bought before 2018 these shares holding for long term on an assumption that their gains are exempt? Getting it? Now you're taxing it, right? It's unfair, right? That's why what they did, you know, as on 31st January 2018 when the amendment was brought, whatever market value is there, right, up to that you claim it as cost of acquisition. Up to that, if you claim it as cost of acquisition, what does it mean? Indirectly, market value are giving you deduction. Indirectly, am I giving exemption or not? That's it. That's the logic behind the amendment. Getting it? So 300. So 480 minus 300, how much? 180 multiplied by 10,000 shares. How much is the gain? 18 lakh. Long-term capital gain is 18 lakh. Now this house property loss can be set off against long-term capital gain. But before that, before you apply set off, check is the SSE going for default tax regime or optional tax regime. If it is default tax regime, loss under the head house property cannot be set off with capital gain. Correct? Are you clear until now? So as on 31st March, average price and highest price both were given. You should only take the highest price, not the average. Average price is not the relevant criteria. Are you clear? Lowest price also not the relevant criteria. Highest price is only relevant criteria. Next, Mr. Raja wants to pay tax under default tax regime. Very important. Which means house property loss, house property, of course, anyhow, right now it's income, right? Not an issue. Not an issue. Fine. Based on the facts of the case scenario given above, choose the most appropriate answer to the following question. What would be the residential status of Mr. Raja? Now you need to be clever. Income from capital gain is how much? 18 lakh. Correct? And you know, this one, both put together 19 lakh. So 120 days or more during the year. 365 or more in the past 4 years. And income from Indian sources is more than 15 lakh. Total income from Indian source. So he is a resident but not a. So answer is B. Correct? He is only visiting India. Furthermore, this provision is applicable. Suppose, no, if the SSA is there current year, he is leaving India for employment. For him, 15 lakhs logic and all, we don't apply. Only for a visitor, we apply this. Remember? Yes, next. You know, in, I think, September 24 exam, I think so. Leaving India is what tested. Getting it? September 24 or MTP2, somewhere it is there. Next. What would be the amount of income taxable under that? Income from house property. It is how much? 1,38,200. Correct? B. What would be the amount of capital gain? It is 18 lakhs. Correct? Yeah, that's it. 3 MCQs answer is over. B, B, A. Clear all of you? So, we will solve the second question also. Then finally, we'll come back and see. Next. Or else I'll see right now itself. B, B, A. Perfect. Correct? Yes. Next. See, it's not deriving the answer. It's the logic which is important. Computation logic is important. Answer, it's okay. Next. Mr. Anai, who is aged 52 years, is a CEO of a company called XYZ Limited, Private Limited. So, okay. During the previous year 23-24, he earned a salary of 1,65 lakh. It's a earned salary. Okay. Which means standard deduction you need to reduce. Okay, that to standard deduction under normal regime 50,000. Under default tax regime 75,000 standard deduction. Obviously. No. First of okay. I think standard deduction has been increased from the next attempt. Yeah. For you it is not applicable January because I'm actually doing for me also. Yeah, fine. For you it is only 50,000. Okay. Yes. He earned how much? Salary of how much? 1,65 lakhs. Okay. And long-term capital gain on sale of listed equity. By the way, standard deduction is applicable whether you go for OPT, optional tax regime, or default tax. Both of them you get 50,000. Yes. So salary 1,65,000. This is earned salary, not computed salary. If at all it is computed, means standard deduction we don't reduce. Long-term capital gain on sale of listed shares, STT paid. How much it is? 1,06 lakh. Long-term capital gain 1,06 lakhs. 112A. Up to 1 lakh you don't pay any tax. Remember, it's not exempt. People confuse it between exemption. No, it's not exempt. Taxable income is 106 only, but when you are computing tax, you will compute tax only on the beyond 1 lakh portion. Are you getting it? Next, this judgment is very important. See, this judgment is very important. Just listen, no, I'll tell you. 1,06,000 is there, right? 1 lakh is not exempt. It is exempt only from tax. It is not exempt. It is not an exempted income. It is only exempt from computation of a tax. It's a basic exemption limit, just like that. Why this clarity is important, you know? Suppose what if this income is given? Suppose no, you were given like this exactly. 15,05,000 income is there. Total income how much? 15,05,000. Entire income is long-term capital gain. 15,05,000 is there. And the SSC visiting India. 120 days or more he stayed. 365 or more also he stayed. He has exactly long-term capital gain of 15,05,000. He is a resident or not? Yes, he is a resident. But when you are computing tax, you will compute 10% only on 14,05,000. Are you getting this point? For deciding how much is taxable, entire 15 lakhs is taxable. How much is gross total income? How much is included under income from capital gains? Entire 1,06,000 is included in gross total income. Total income also will consist of this. But when you are computing tax, 1 lakh will be eliminated. Only on the balance portion, special rate of 10% will be applied. Very important. Many students by mistake they do reduce 1 lakh in the computation itself. Never. At the time of tax computation only 1 lakh should be reduced. Next. He earned interest on savings bank account. How much it is? 4,82,000. Remember, he is not a senior citizen. 80 TTB will not apply. TTA only will apply. 10,000 is the maximum deduction in respect of savings interest. Correct? Next. So, okay, we'll keep it aside. So, how much is the salary income? 1 crore 65 lakh. Correct? Minus standard deduction 50,000. So, how much is the net income? 1 crore 64 lakh 50,000. Correct? Then long-term capital gain how much? 1,06,500. Then interest on savings how much? 482,778. 4,82,778. Fine. Further, he provided the following information for filing his return of income. He does not receive HRA from the employer. Okay. Mr. Anai took a loan from State Bank of India on 27th 2021 for repairing his house, which is self-occupied at Delhi. For repairing means what is the maximum? Yeah, 30,000 is the maximum reduction. Yes or no? Next. And paid interest on such borrowings of 80,000 and 1,50,000 towards principal amount. Okay, interest is 80,000. Towards principal how much? 1,50,000. But how much interest we consider? 30K. But that to remember, interest on loan is eligible for deduction only if it is normal tax regime. If it is again default tax regime, no deduction at all. Fine. Mr. Anai had made following payments towards medical insurance premium for medical policies. 80D related information. Remember, principal repayment is 80C. Medical premium is 80D. Okay. 80C how much it is? 1,50,000 entirely he can claim. Correct? 1,50,000. Medical premium, brother, not allowed. Only for SSC spouse, children and parents. Premium for the parents allowed 17,670. Obviously senior citizens they would have been 50,000 is the limit. Self and wife 21,000. Yes or no? Self and wife how much? 21,000. Entire 21 he can claim. Correct? Next. Next. He also incurred how much? 6,400 for preventive health checkup of his wife in cash. Okay, preventive health checkup how much for wife? 6,400, but maximum limit is 5,000. But for the SSC, no. For his category, no. SSC and spouse, not senior citizen, maximum limit is 25,000. 25,000 is the maximum limit. So, preventive health checkup can be claimed how much? Exactly. So, for self 25, for parents 17,650, 42,670 is 80D value. Agreed. 42,670 is the 80D value. Agreed or not? Next. He also incurred, okay fine. He deposited 1 lakh towards PPF. ATC, already ATC limit is over. ATC limit is over. He also deposited 50,000 and 2,50,000 towards Tier 1 and Tier 2 NPS account respectively. Tier 1 and Tier 2. Tier 2 NPS, no, it's actually ATC. Only for central government employee deduction will come. Only for central government employee, tier 2 NPS contribution deduction will come. That's the last item in ATC. If you go ICA book, it's the last item in ATC. Contribution to tier 2 is a ATC deduction. That too, that can be claimed only by central government. He is an employee in a private, he is an employee in a normal company. We don't know, nothing is given. We assume that it's a non-government company. Yes or no? So tier 2, 1,50,000, 2,50,000, whatever he contributed, no, not eligible for deduction. ATC he will not get. Then he also contributed tier 1, how much? 50,000. How much he contributed for tier 1? 50,000. Tier 1 means 80CCD. Tier 1 means what? 80CCD. I will allocate it under 1B. I will straight away first allocate it under 1B. Then balance I will allocate it for subsection 1. Why? See, 80C, 80CCC, 80CCD, subsection 1 put together 1,50,000 ceiling. Now, when 80CCD contribution is there to tier 1, you have option to allocate that money under subsection 1 or 1B. Which is beneficial? Allocate first to 1B, because 1B and subsection 2 is not counted in overall limit. Correct? Is not considered in overall. So I will allocate this entire 50,000 to 1B, which is not counted in overall limit, so that I will get a overall deduction higher. Next. Then he has paid 5,30,000 as advance tax. His employer has deducted TDS at 51,89,000. TDS is there, advance tax is there. He is of the opinion that balance amount of tax, if any, he will pay on 27th July. Maybe that is the time at which you want to file the return. And he shift out. Shift out means what? He is not going for default tax regime. Getting it? Sometimes in exam they'll give you, he decided to go with optional tax regime, or he is ready to pay, or he is willing to pay tax under optional tax regime, or he is willing to pay tax under default tax regime. Any words they can use. SSC has exercised the option of shifting out, means optional tax regime. SSC has not exercised the option of shifting out from default tax regime. Not exercised the option of shifting out. Read the sentence thoroughly, you will understand whether he is going with DTR or OTR. Clear? Next. Now, based on the facts, choose the most appropriate answer. What would be the amount of deduction available to Anai under chapter 6A? Probably this question they are asking, assuming he is not going for default tax. Of course, they have given information that he is not going for default. So what is the total chapter 6A deduction? Just now we computed. ATC 1,50,000 and ATD 42,670. ATCCD 50,000. Correct? How much is that? Wait. ATTTA 10,000. Yes or no? ATTTA is also there, right? How much is the total amount? 2,670. Correct? 2,52,000. I hope your totaling is right. Okay, 252, 670. ATC is there, ATD is there, CCD 1B is there, and we have ATTTA. That's it, no other section. Fine, perfect. Next. 2,52, 670. Option is C. Okay, option is C. Next. We'll continue. We'll see all the, we solve all and then we'll compare it. Okay. Next. Assume that for the purpose of answering this question alone, that Mr. Anai pays a rent of 65,000 per month for his rented house at Mumbai to Mr. C, a resident individual. Okay. Is he liable to deduct TDS on such rent? Yes. 65,000 per month. 194 IB. Yes or no? 194 IB is applicable to NSS who is not having business income or profession income, or having business or profession income but having less than 1 crore turnover. Yes or no? Now, when monthly rent is more than 50,000, TDS will be deducted in the last month. 5% of the total rent paid during the year. Yes or no? Provided that last month TDS shall not exceed the last month rent. Or else you leave it that point, it's okay. Getting it? So last month will deduct 5% on the entire rent paid throughout the year, provided monthly rent will exceed only 50. Monthly rent exceeds 50,000. If at all a particular month rent is less than 50, that month is not liable for TDS. Correct? Now here he paid 65,000 per month, multiplied by 12 into 5%. 39,000. How much he need to deduct? 39,000 he need to deduct. So the answer where 39 is there? Here. Yes, Mr. Anai is liable to TDS at 5% in the month of March. Yes or no? Option is C. Are you clear? All of you? The answer is C. Understood or not? How we calculated? 65,000 per month multiplied by 12 months is equal to total amount multiplied by TDS rate 5%. TDS will be deducted under 194 IB in the last month, March month directly. Clear? That's it. The reason is simple. He don't have TAN number. He is not a business person to have a TAN number. He cannot pay monthly. So in order to reduce compliance burden, we directly, department gave a relaxation that okay, at a time you pay TDS in the month of March. Clear? If at all the owner has not given PAN number, 20% higher rate will be given, where tax of TDS cannot exceed last month rate. That's it. Understood? Next. What would be the amount of interest chargeable under 234B on account of short payment of advance tax? Now we need to compute tax liability. Actually, very lengthy question. It's not easy. Fine. So we have computed salary income, correct? Long-term capital gain, interest on savings, correct? So now let's compute tax liability. Is there any other income for the SSE? His employee deducted TDS, nothing. Okay. So no, that is rent paid, man. 65,000 is per month rent. So salary we considered, interest we considered, gains we considered, correct? There is no other income. So what is the gross total income? Gross total income how much? 1,64,50,000, 106,500, 482,778. 1,70,000, 39,278, correct? Minus 80C. What is the minus 80C deduction? How much it is? Hey, 2,52,000. Total deduction we can reduce, no? Normal income is so much. Is there. Normal income is so much. Correct? How much it is? 2,52,670. Correct? Balance amount how much? Total income 67 lakh. Now tax liability will compute 1,67,86,000. Out of this special rate of income is 106,500. What is the balancing figure? 1,66,80,108. Correct? 80,108. What is the age of the SSC? 52. Normal citizen, normal tax regime, 2.5 lakh basic exemption. Correct? The tax liability will be 1,12,500 plus very simple 1,56 lakh 80,108 multiplied by 30%. Tell me, just 1,56 lakh 156,80,108 multiplied by 30% is how much it is? 4,032. So total it 48 lakh 16,532. Correct? Yes, plus surcharge. Surcharge is applicable. How much is the surcharge? 15%. 1 crore crossed, no. 1 crore to 2 crore, what is the surcharge rate? 15. 2 crore to 5 crore, 25. More than 5, 37%. 1 crore crossed, that too so much. No need to compute relief also. So much is there. No need to compute relief. 15%, how much it is? 48 lakh into 50. 7 lakh? 72,000? 480, correct? Now what is the balance tax? What is the balance tax? 55 lakh? 39,000? 12 plus 4% cess. हाँ 60 just a minute ma 57 lakh 60,000 572 whatever 3. How much is the advance tax he paid? 5 lakh 30. Sorry, yeah, advance tax minus 5 lakh 30,000. Okay, minus TDS how much? 51 lakh 89,000. 51 lakh 89,000. What is the balance tax payable? 41,000. Oh my god, 572. Now they're asking 234B, will the interest applicable or not? 234B interest is applicable if the tax paid is less than 90% of the SST tax. 234B, what is the condition? If the total tax paid, simple, if the total tax paid in the form of TDS advance tax is less than 90%. Very simple. Out of this 90%, how much? First of all, just a minute. As on 1st April of the assessment year, you should compute. Is the total taxes paid? What is this? 51 plus 89 is there, right? 5,30,000 plus 51 lakh 89. 5,30,000 plus 51 lakh 89,000. Both of you total it. 51 lakh 89, 5,30,000. Divided by 57 lakh 60,000. 57 lakh 60,000. What is the percentage? 99. 234B does not apply. 234B does not apply. The answer is what? Nil. The answer is what? Nil. 234B does not apply because the total tax payable is more, the total tax paid in the form of advance tax and TDS is more than 90% of the assessed tax. Don't know this? Okay, fine. If 234B interest will not apply if it is more than 90%. That's it. Answer is over. So, shall we cross check? CCB, correct? Second one, D they considered probably 80 CCD 1B they didn't apply. 80 CCD 1B they didn't apply. Probably the person who solved this question would have given priority to subsection 1. 1B they forgot because I told you anywhere you can allocate. But we took what type of amendment? We took what type of allocation? 1B we allocated. So we can get an additional deduction. Our answer is superior. Our answer is better. Their answer is wrong. Because their answer is not beneficial to SSC. Our answer is beneficial to SSC. Contribution to National Pension Scheme Tier 1. You can straight away allocate it under 1B. Getting it? Balance if at all is there 1 which is again subject to overall limit which already expired. Correct? Our answer 252 is correct. Their answer 202 is not correct technically. Now you will get a doubt in exam what we should do. Alternative answer MCQ will be considered if at all. Obviously somebody will raise this. Getting the point? Somebody will raise this. So institute will consider alternative answer also. They will give answer for either C or D. Both. Able to understand. Next. Actually the C is correct. C is the right answer. Next. Can I proceed? On 20th October, Priya, minor child, okay, she gets a gift of 20 lakh for her father's friend, fully taxable. On the same day, the amount is deposited as FD in Priya's bank account. Okay. On the set deposit, interest of 13,000 was earned during the year 23-24. Interest on deposit is also subject to clubbing. Getting it? In whose hands the income of Priya shall be taxed. Also compute the amount of income that shall be taxable if both the parents pay tax under. Compute the amount of income. Also compute the amount of income that shall be taxable if both the parents pay tax under default. 10 subsection 30 to 1500 won't be there. 1500 exemption is there, right? That won't be there because it's a default tax regime. Correct? Now, how much is clubbed? 20 lakhs will be subject to clubbing. 13,000 is also subject to clubbing. Both this 20 lakh 13,000 is subject to clubbing in the hands of the income of that parent whose income is higher before considering this. Income of 20 wrong. This is also wrong. C answer wrong. Directly A answer wrong. 20 lakh 13 shall be clubbed in the hands of father wrong. Income of 2013 shall be clubbed in the hands of Priya's father or mother whose income before clubbing is higher. Answer is D. Correct? Able to understand? Simple question. Rohit, a resident Indian, has incurred 15,000 for medical treatment of his dependent brother who is a person with severe disability. 80 DD. Straight away 1,25,000. Straight away 1,25,000. Severe disability. If it is a normal disability, 75,000. Has deposited 20 with LIC. Rohit shifted out of default tax. This is very important observation. Which is very important. But thank God here the answer nil is not given. Since nil is not given, definitely our answer is right without even checking that point. Correct? That's it. All the MCQs are over. Now just a minute. 3 answer is what? D. 4th answer is also D. So all the 15 marks we completed. Correct? Within 27 minutes we did. That too with what? So much of explanation. Correct? We can in fact solve another 5 more MCQs within the time available. Technically speaking, understood or not? Provision clarity so important to solve the MCQs in a easiest way, in a right manner. Getting it? Don't think always their answer only right. Look at the process logical. Suppose one MCQ they gave a wrong answer, where we computed a most beneficial answer. Next. In this one, important observation is what? Contribution to NPS is 2 tiers. Tier 1, Tier 2. Tier 2 will come under ATC only. Tier 1 NPS will come under ATCCD. That's one important observation. I think you might have not seen this observation earlier. Clear? Next. Shall we? Yes. We'll do one thing. We'll do MTP2 MCQs also. MCQs MTP2 also will cover. Are you all ready? Yes. Next. MTP2. MCQs only first. Then we'll start descriptive. I'm telling you, only through these MTPs, you will be covering at least 25 to 30% of the provisions. 20% of the provisions, only through these MTPs. Next. So, MTP2 related MCQs. Okay. So, MTP1 descriptive part. So, I'll tell you, between income tax and GST, income tax is only easiest. GST can be complicated like anything. The paper can be complicated like anything. If at all they want to ask a tough question, GST will be toughest. If at all they have to complicate. In income tax, that possibility is not there. If you understand the provision, it is very clear, simple. You see, confusing points won't be there in the income tax. Confusion will be more in GST only, not in income tax. Income tax, it appears like it is lengthy, but both are same size. GST and income tax both are of same size in terms of the subject. If you clearly work on income tax thoroughly, if you are thorough in provision, you can solve any kind of paper. Confusion possibility is very low. Whereas in GST, the possibility of confusion, assumptions is very high. Okay, now let's begin the descriptive paper MTP1 Jan 25 related. So, now whenever you are solving descriptive question, first look at the question, what exactly they are asking. Here they are not asking actual question. Somewhere at the last, you are required to compute total income and tax liability of Mr. Amit under normal provisions of the Act. Sometimes no, they will ask you the question to compute in both default as well as normal. At that time, what you should do? First, you should compute default tax regime. Then you should do a reconciliation of normal tax regime to default tax regime. First, you compute income as per default tax regime. Then put a table, computation of income under normal tax regime. Take default tax regime income, add back or less whatever adjustments will be there in a differential provisions is that's called reconciliation statement. It's like a BRS. Getting it? So take default tax regime income, gross total income, reduce chapter 6A, reduce scientific research, all that. Able to understand? Then you will arrive normal. Here straight away the question is simple. Normal tax provisions, not default tax. When if it is a normal provision, AMT is applicable. Remember. If it is normal provisions, AMT possibility is there. 115 JC, 115 JEE. Able to understand? AMT provision is what actually? If at all SSC claim a deduction under 10 AA, 35 AD or 80 QQB RRB, yes or no? Then the adjusted total income, yeah, 80 IA series, of course. That is not applicable in CA Inter. That's why I'm not considering that. Adjusted total income, if it is more than 20 lakh, AMT is applicable. Correct? Now let's come into this. Mr. Amit, aged 45 years, is a resident Indian, has provided you the following information for the previous year. By the way, what we need to compute? Total income, tax liability also, both. Okay. Now, he received royalty of 2,88,000 from abroad for a book authored by him, which is in the nature of artistic. So, PGBP income, right? PGBP income how much? 2,88,000. Royalty is a PGBP income, yes or no? Next, the rate of royalty was 18% of the value. By the way, 2,80,000 is received. Is this a lump sum royalty or monthly royalty? Since information is not given, it is considered as a monthly royalty. Moreover, they have given one more indirect clue. The rate of royalty was 18% of the value of the books and expenditure made for earning this royalty. Okay, 80% of the value of the books. Means books sold value is there on that 18%, which means it's not a lump sum royalty, it's a pro rata royalty. It's a per annum monthly royalty base. It's not a lump sum royalty. Able to understand? So 18%. Why 18% value is given? Now, if you see, if at all royalty is received in lump sum, 3 lakhs straight away deduction. How much is the deduction? 80 QQB. What is the deduction available? Actual amount of royalty received or 3 lakh, whichever is lower, provided the amount received, right? It must be realized in Indian currency. It must be in a foreign currency, convertible foreign exchange. Yes or no? And it has been brought into India by 30th, within 6 months from the end of the financial year. Correct or not? That information, you see, the amount remitted in India, the amount remitted to India till 30th September is how much? 2,30,000 only. Are you getting it? Which means under 80 QQB, maximum deduction available how much? 2,30,000 only, maximum deduction, that too. Further, here, amount of royalty received is proportionate royalty. Suppose if the royalty is not a lump sum in nature, but a proportionate in nature, then deduction cannot exceed 15% of the value. Deduction cannot exceed 15% of the value. Correct? Now, here itself simultaneously will collect. So, what is the 2,88,000 is there, right? This is for what value? 18%. Now, deduction is available only for 15% value. How much is the 15% value? 2,40,000 only. Once again, you see, 2,88,000 multiplied by 15 divided by 18. Only this much is eligible for 80 QQB deduction. That too, entire 240 we didn't brought in India. How much we brought in India? 2,30,000. So deduction cannot exceed 2,30,000. So 80 QQB deduction, how much it is? 2,30,000. But before claiming deduction under 80 QQB, you see here, expenditure made. What is it? Expenditure made for earning royalty, how much? 40. Entire expenditure you can claim deduction, right? Expenditure made on the royalty, yes or no? How much it is? 40,000. In PGBP, income is taxable, expenditure is deductible. What is the net royalty? 2,48,000. Correct? Now, deduction under 80 QQB. How much deduction you will get? In case if the royalty is received on a monthly basis or yearly basis, proportionate basis, but not a lump sum. Lump sum means one time. Lump sum means one time. If the royalty is not received like a one-time payment, in such case, royalty is exempted to the extent of 15% only. To the extent of 15. Here they have given on 18 value. 15 value is almost 2,40,000. Provided, again, royalty received within India in convertible foreign exchange within 6 months from the end of the fund, that is only exempted. How much again here? 2,30,000. Again, this entire deduction is for what? For your research expenditure, all that. Already you claimed how much deduction? 14 PGBP. How much deduction you can claim here? 1,90,000 only. Double deduction will not be given. Able to understand. So 80 QQB answer is how much? 1,90,000. This is the answer under 80 QQB. Remember, we received royalty 2,88,000 for 15% 240, which means 80 QQB deduction shall not exceed 240. Further, out of the total expenditure purpose 80 QQB, 40 is already claimed. 40 is already claimed. Moreover, before this, how much you can claim? Eligible deduction 230. Entire 230 can I claim? No, already 40,000 towards expenses already claimed. 80 QQB purpose itself is to give deduction for expenditure in order to promote innovation, research and development in the country. So 80 QQB, 80 RRB was given in order to promote research and development in the country, in order to encourage more and more scientists. Are you getting it? That is the reason why deduction is given. So you may be incurring actually 40,000, but under 80 QQB, 80 RRB, up to 15% of the amount of royalty is straight away allowed as deduction, provided only one condition. If the royalty is received from outside India, it must be received in convertible foreign exchange within India. So 230, already 40,000 you claim deduction. So maximum deduction available is 1,90,000. That is under 80 QQB. Understood or not? Whereas PGBP point of view, 2,88,000 minus 248. Under 80 QQB, 1,90,000. Now total deduction you see, 40,000 in PGBP I claim, 1,90,000 under 80 QQB. Total how much I claim? 230. That is what they are saying, right? Yes or no? All of you. Next. He owns an industrial undertaking which is established in SEZ. SEZ means 10AA, which had commenced operation during the year 21-22. 21-22 they started operation. Maximum permission is 2021. Actually 31st March 2020 only. 31st March 2020 only SEZ operations can be commenced. But with a special permission, they can go up to 31st March 2021 also. 2021, 2020, 2021 also they can start operation. Actually 1920 is the last year, financial year. Assessment year 2021, nothing but SEZ, which commenced operation before assessment year 2021, that is only eligible for 10AA. But with a special permission up to previous year 2021, nothing but assessment year 21-22 is also permitted. But here it is 21-22 previous year they started. They started operations in 21-22 previous year. 10AA exemption is not available. 10AA exemption is not applicable, which means from this SEZ, whatever profit is totally taxable. Agreed? Total turnover 200 lakh, which include 140 lakh from export and which is received in convertible foreign exchange on or before, that and all is irrelevant. What is the profit? 20 lakh. Straight away, what is income taxable? SEZ. How much is taxable straight away? 20 lakh. Correct? 20 lakh. Correct? Next. Understood this 10AA point? They commenced operations in 21-22. So they are not eligible to claim 10AA. But they are eligible to claim 80 QQB. By the way, remember that. 10AA, RRB, QQB, they are all irrelevant. They are not connected. But 10AA, 35 AD connected. If you are claiming under 10AA, 35 AD you cannot claim. You cannot claim 80 IA, IB, IC, that one. That and all you have in CA final. Understood? Next. He was holding, are you clear on first 2 points? He was holding 30% equity shares in TSP Private Limited. How much it is? 30% only he is holding, which is an Indian company. Company allotted shares to shareholders on 1st October 2020. The paid up share capital of the company is 20 lakh divided into 2 lakh. 2 lakh shares is the total paid up capital. He is having how many? 30%, which means how many shares? 60,000 shares he is having. Correct? Which were allotted, which are 10 rupees face value with a premium of how much? 30, which means what is the price? 60,000 into 40 rupees he paid. Correct? He bought 60,000 shares of TSP Private Limited by paying 40 rupees. Yes or no? He sold all these shares on 30 April 2023. 23-24 financially he sold. At what price? 60 per share. When the shares were allotted? 1st October 2020. Unlisted shares. Correct? What's the criteria? 24 months. What's the criteria? 24 months. We'll see. Later it was listed on stock exchange. You see, equity shares of TSP are listed on NSE and Amit paid STT both at the time of acquisition as well as at the time of transfer of the shares. So both the time he paid. Fair market value as on 31st. Fair market value as on 31st January 2018 was 50 per share. Actually, if you see, he purchased, the shares were allotted on 1st October 2020, right? Which means he is not having shares on 2018, right? Is that fair market value data relevant to us? It's irrelevant. At what price he sold? 60. At what price he purchased? 40. What is the long-term capital gain? 20. 112A, no indexation. Correct? 112A, no indexation, listed. And see, remember, if at all you acquired shares before 2018 only, that logic and all is applicable. Here the shares were allotted on 2020 1st October. So this information is irrelevant to confuse you. Agreed or not? So how much is the capital gain per share? 20 into 60,000 shares. How much it is? 12 lakh. How much is the long-term capital gain? 112A, 12 lakh. I hope it is correct only. We'll see. Are you getting it? You are agreed with my logic? This 31st March 2018 fair market value data is required when the shares were allotted before 31st January. Shares were allotted only on October 2020. So this question itself is, this 50 rupees data itself is irrelevant. Correct? Next. Received 30,000 rupees as savings bank's deposit. Received 30,000 as interest. Actually, it's actually interest. Okay. Income from other sources, right? Income from other sources. SB interest how much? 30,000 rupees. Okay. Then, by the way, normal provision, right? 80 TTA. His age is what? 45 years. Resident. So 80 TTA is eligible only for residents. Remember. So 10,000 rupees he can claim, right? 80 TTA anybody can claim. Sorry. There is no 80 TTA. Resident or non-resident, both of them can claim. Getting it? It's okay. Don't refer now. Later you refer. It's okay. 80 TTB is only for resident. 80 TTB is only for resident senior citizen. Okay. Next. Next, you need not check the provision also. In resident status, there is a big provision, no? ROR, RNOR, NR. In all the cases, 80 deduction is there, you see. One problem is there. Fine. 80 TTB is only for resident. Resident senior citizen. Okay, fine. He occupies ground floor of his residential building. Look at this carefully. He occupies ground floor of his residential building. Okay, he occupies ground floor of his residential building and let out first floor for residential use at an 2,28,000. First floor is let out, first ground floor is self-occupied. Annual rent is how much? 2,28,000. He has paid municipal taxes 60,000 for current year for both of it put together, right? Both the floors are of equal size. Both the floors are of equal size. So income from house property, I will do working notes. So ground floor, first floor 2,28,000. 60,000 means 30,000 and 30,000. NAV is straight away 0. Here it is 1,98,000. 30%. What is the amount? 59,000. What is the balance value? 1,38,000. That's it. So income from house property is how much? 1,38,600. Just a minute. Is there any interest on loan? Nothing. Interest on loan provision, interest on loan information is not given at all. Yes or no? Next, he paid insurance premium 39,000 on life insurance policy of son who is not dependent on him. Okay, and 48,000 on life insurance policy LIC. 80C dependency condition is not required. 80D only medical premium for dependent children. Yes or no? 80D only dependency condition is there. Correct? Medical premium. Life insurance 39,000 on son and 48,000 on the dependent father. Father is not eligible for 80C. Son is eligible for 80C. 39,000. I assume that it is less than 10% of the sum assured. I assume that it is less than 10% of the sum assured. Therefore, 39,000 is eligible under 80C. He paid tuition fee 42 for his 3 children. Only 2 children it is eligible. 14,000 per annum. 28,000 only eligible under 80C. Correct? 39,000 under 80C. 28,000 under 80C. You are required to compute total income. I think yes. That I think we can finalize now. Yes or no? What is the gross total income? What is the gross total income? Just a minute. So you see here. This is from royalty. Yes or no? Says 20 lakh. LTCG 12. IFOS 30. What is the gross total income? 12, 32, 34. 34 lakh 48. 34 lakh 78,000. Correct? Minus 80C. How much it is? 80C. Just now we computed. 39,000 plus 28,000. 67,000. Correct? Minus 80D 0. I think 80D is not given, no? Yeah. 80 QQB 1,90,000. Correct? 80 TTA 10,000. Correct? Yes. What is that balance income? 30 32 lakh 11,000. Are you clear until now? So this is the total income as per normal provisions. Now what is the tax liability we need to compute? Now when you are computing tax liability, special rates how much? 12 lakh. What is the balancing figure? 20 lakh 11,000. So on this tax is how much? 1,12,500 plus 10 lakh 11,000 into 30%, 3 lakh 3,300. 3 lakh 3,300. You understood? 30% on 20 lakh. Sorry, 30% on 10 lakh 11,000. What is the total tax? 4 lakh 15,800. Correct? In this 1 lakh you eliminate. 11 lakh multiplied by 10% is equal to 1 lakh 10,000. Correct? Both put together how much? 5 lakh 25,800 plus, since income is less than 50 lakh, surcharge is not applicable. Since the total income is less than 50, no surcharge. Straight away 4% says how much it is? 5 lakh 46,830, nearest to 10 rupees. 5 lakh 46,830 is the tax under normal tax regime. Agreed. With this everybody will stop. No, AMT provision, because he claimed deduction under 80 QQB. Yes or no? What is the total income as per normal regime? What is the total income? 32 lakh 11,000. 32 lakh 32 lakh 11,000. Add back 80 QQB. How much it is? 1 lakh 90,000. So what is the adjusted total income? 34 lakh. Sorry, 1000. Yes or no? Now compute tax on this. Special income how much? 12 lakh minus 1 lakh 11 lakh multiplied by 10% is equal to 1 lakh 10,000. What is the balancing figure? 12 lakh 1,000 multiplied by 18.5 percentage flat. Correct? How much it is? 2,22,185. So what is the total tax? That's what I'm adding. Sorry, here it is. 22 lakh. Sorry. Yeah, 22 lakh into 18%, how much? Balancing figure, sorry, I computed wrongly. It is 22 lakh. Yeah, into 18.5, 4 lakh 185. Now, total tax is how much? 5 lakh 7,000. Sorry, 5 lakh 17,185 plus 4%. Yes or no? Adjusted total income is less than 50. So, no surcharge is applicable. Is equal to 5 lakh 870 nearest. Under AMT you have to pay 537, whereas under normal tax regime you have to pay 546. I think normal tax regime only applicable. Since normal tax liability is more than AMT, normal only applicable, AMT will be ignored. Correct? All of you will see the answer. $138,600 correct only. House property income we calculated correctly. 138,600. Where is house property in our book? Ayyo, we didn't include. I considered. Okay, fine. We'll do one thing. We'll add back and then recalculate. Very simple. Can I do a simple calculation here? Okay. 1,38,600, right? Okay. Here we will add 1,38,600. Correct? Just a minute. See how I will derive here. 1,38,600, right? Into 30% is what? 1,38,600 into 30% is what? Plus 4%. 43,000. 43,000. 5,46,830. 240. Total 5,89,000. Sorry, 5,90,000. 73. Correct? Yeah. I just did an adjustment. Understood this provision? Income from house property we missed in gross total income. Instead of adding there, changing GTI, changing total income, I straight away compute. Anyhow, already SS is in 30% slab. That 1,38,000 is already taxable at 30% only. So 1,38,600 into 30% plus 4% is equal to 43,240. Extra taxable if you add, that's enough, right? Same way here also 1,38,600 multiplied by 18.5% is how much? 25,641. So revised tax will come 5,826 plus 4%. Yes, 4%. That's not, you just have to add sets. 5,64,540. You must be very strong in tax calculation. This is completely arithmetics. What I simply did in both the cases, 1,38,600 is there, right? Already SS is in 30% slab. In the first case, into 30% tax amount plus 4%. To that extent, tax will increase, right? Oh, and total income will also increase by how much? 1,38,600. What is the total income? 33,49,600. This is the total income. Yes or no? On this only I computed tax. Tax computation formula is very simple. On 11 lakhs, 12 lakhs you allocate special rate minus 1 lakh. 11 into 10%. 1,10,000. Here it is. Exactly. Understood. All of you. So let us see the answer. What's the total income we got, by the way? I think we did mistake. We'll see, wait. So house property income, correct? Okay. Says business, correct? What about where is other income? Where is royalty? They classified under other sources. It's actually you can classify it under PGBP as well as you can classify it under other sources. Both are permitted. So royalty income we calculated 2,48,000, correct or no? Yes or no? You see here 2,48,000, correct? 20 came. Yes or no? And house property income 1,38,600 also came. Okay. Long term capital gain, you see. Long term capital gain how much? Just a minute. Capital gains on transfer of 60,000 shares, 2 lakh into 30%. Sale consideration agreed. Cost of acquisition, actual cost, lower of FMV or actual sale consideration. This is not right. This answer is not correct. This answer is not correct. Why? Because shares were purchased when actually shares were allotted itself is on 1st October 2020. How come fair market value in 2018 will be there? Share itself is allotted on October 2020. How come for that market value will be there in 2018? Probably why this mistake came, you know. This particular adjustment would have been copied from old question. They integrated the 2018 related amendment. That is why they did a wrong calculation. Suppose if the shares were allotted in 2017. For example, okay, let us take that analysis. Shall we go with that analysis? Let us modify the question alone. Shares were allotted in 2017, we will consider. Getting it? Now, what is the market value? What is the cost of acquisition in that case? 50. What is the cost of acquisition? 50. Yes or no? 50 rupees per share is the cost of acquisition. 60 rupees is the share at which per share it is sold. 10 rupees is the margin. 10 into 60,000 shares, 6 lakh rupee. Are you clear? That's a blender mistake. Never interpret your provision based on answer given. You're getting my point? Here shares were allotted in 2020. How come it will have a market value in 2018? My question, fundamental question itself is wrong. Why this mistake would have happened? They copied old problem into latest one. Dates they changed. But they forgot to mention this particular, they forgot to apply, they wrongly applied this provision. Correct or not? When the SSC acquired shares before 31st January 2018, moreover the question itself is wrong, you know, because they said it's a private company. Later what happened? Later you see what happened. Equity shares are listed on stock exchange. They were listed on stock exchange. It's a private company. Yes or no? Later it was listed on stock exchange. STT paid at the time. How come it will be? Question itself is wrong. So that's why what assumption we will take? Let us take assumption that it was allotted in 2070. That time what will happen? Capital gain will be 6 lakh. That time capital gain will be, yes or no, 6 lakh. If at all we take assumption that shares are allotted in 2017. Very simple. Before 2018 they were allotted. You purchased them before 2018. That time what is the cost of acquisition? Actual cost 40 rupees or fair market value, whichever is higher. 50 rupees we will take. Yes or no? Accordingly 60 rupees the selling price minus 50 rupees, 10 rupees per share profit. He is having shares 30%, 60,000 shares, so 6 lakhs is he gain. Yes or no? So which means here it is not 34 lakh 78, 28 lakh 78,000. Correct? Gross total income will be, total income will be 27 lakh 49,600. Correct? 27,49,600. At that time tax computation will be changed accordingly. Agreed or not? One. Next. So 6 lakhs. This answer which they gave is wrong because question is not correct. So we modified the question accordingly. The 6 lakhs value will also be correct. Next, income from other sources. This is computed correctly. Deduction 10A not eligible. Correct? Because the operations have started in 21-22. Deductions. Tuition fee 28 we calculated. Insurance correctly. Total 67. QQB 1,90,000. TTA. Correct? So our entire answer is correct steps wise. Totaling and I am not checking at all. Accordingly, tax computation. How it will be tax computed? On 5 lakh, 10%. Yes or no? 27. Balance is how much? 27 minus 6 lakh, 21. On the slab rates. So 527, 680. Exact step we applied. Array man, wall of what happened? Exact steps we followed or not? Next. Suppose what if it is a alternate tax AMT? Here we all do one mistake. What you know? When we are computing AMT, this mistake we should never do this. In AMT, special rates concept itself is not there. Even if it is a lottery income, still 18.5% only we apply. When we are calculating alternate minimum tax based upon adjusted total income, we will not classify the income into lottery income, this one or that one. No, we don't. We straight away apply 18.5%. This mistake many students will do because they don't observe it. Are you getting the point? I just did, just figuring out whether any of you will identify or not. I think one or two would have identified probably because they raised the question when I'm putting this, this it. Okay, probably. Okay, I thought somebody would have identified. If at all your answer reaction is correct, then that means you know the provision. Clear? So when you are calculating AMT, special rates of tax itself is not applicable because AMT itself is a special rate. AMT itself is a special rate, correct? So AMT, how we should calculate? By the way, what is the steps that we did for AMT? Total income we took, deduction we added back. Our step is correct or not? On that side way, 18.5 plus cess 5 lakh 65. Clear or not? Every time whenever you are calculating tax, see what is the total income. If it is more than 50, surcharge will apply. Before cess. Every time you should have a checkpoint. Every time I told this, yes or no. Understood the problem or not? In this, question contains wrong information for capital gain related purpose. Question itself is wrong regarding capital gain. That's it. Because share itself is allotted in 2020. Market value in 2018, how it will be possible? That's it. Understood or not? When 31st January 2018 market value, that and all is relevant if the shares were allotted before 31st January. I acquired them before 31st January. If at all 31st January, I told, remember one exemption is at that time. Finance Act 2018 removed the exemption. Earlier, no, listed shares if you buy and sell long term, no capital gains tax at all, zero. Finance Act 2018 brought an amendment saying you have to pay capital gain tax. What about people who bought long back thinking that they will get an exemption? That's why what finance ministry did, okay, I'll do one thing. As on 31st January, what is the highest market price you take? That much you consider cost of acquisition. If at all that much is given as cost of acquisition, later on if at all price is increased, only additional profit you are getting after 31st January only we are taxing it. Yes or no? That's it. Understood or not? Next. So see, when you're solving the provision, I hope you're able to recollect. 10 QQB I revised it, 10 AA I told it. 10 AA what is it? First 5 years flat 100% export profit. Next 5 years flat 50%. That next 5 years subject to transfer to reinvestment reserve 50%. How much ever you transfer, that much. Provided export turnover must be realized in convertible foreign exchange within 6 months from the date of the balance sheet, from the end of the previous year, correct? 6 months, I mean, first 5 years, second 5 years and all. And business must be commenced on or before 2021 previous year. If the business is commenced in 2021-22, no deduction at all. Clear or not? Special economic zone reinvestment reserve, yes or no? 11th to 15th year. 11th to 15th year also you're eligible for deduction provided the amount must be transferred to SEZ reinvestment reserve. How much ever you transferred or 50% of the export profit whichever is lower. Correct? Entire provision over. 10 AA major provision is over. QQB major provision I discussed. Then we discussed long term capital gain 31st January related provision also. Understood or not? Next. We took 33 minutes just because of that one mistake, capital gains mistake. If at all that mistake is not there, our answer is over 10-15 minutes back itself. Okay, so we solved it much more. We solved it actually 27 minutes is the time for 15 marks question. Okay, that's it. Next, we solved it within 15 minutes only technically. Mrs. Ria, can I proceed? Aged 62 years, senior citizen, was born and brought up in New Delhi. He got married in Russia in 1996 and settled there since then. Since her marriage, she visits India for 60 days each year during her summer break. You know, Indian citizen visiting India. Correct? Huh? The following are the details of the following are the details of the income. The following are the details of the income for the previous year. Every year she is visiting only 60 days. Okay. You are required to ascertain residential status and compute a total income in India under default tax regime. So residential status we need to ascertain. 60 days only she is coming. 120 days logic itself is not satisfied. Straight away she is a 60 days she is coming. No, B2 condition we will not apply. B2 condition again we can apply with 120 days logic, but she didn't stay 120. Less than 182, less than 120, straight away she is a no confusion. And for non-resident, what incomes are taxable? Only if the source is in India, accrue or arisen or deemed to accrue or arisen in India, or received or deemed to be received in India. Only these two are taxable. What about business controlled from India, profession set up from India? Not at all. Understood or not? Pension received from Russian government, not taxable. Long-term capital gain on sale of land at New Delhi, computed, taxable. Short-term capital gain on sale of shares of Indian listed company where STT paid both at the time of acquisition, taxable, 111A. Next, premium paid for self to Russian Life Insurance Corporation at Russia, ATC deduction. ATC deduction. Yeah, she can claim. It doesn't matter, no. It doesn't matter, no. Wait, we'll see. Rent received equivalent to annual value in spot of Delhi. How much it is? 90. Rent received it is. Minus 30%. How much it is? 63,000. Correct? 27,000 reduction. So 63. So what is the total income? 3,60,000 plus 63. How much it is? 4,23,000 minus premium paid for self to Russian Life Insurance Corporation 75. Actually she can claim that. But we will do one thing. We will take an assumption that this is claimed in Russia. This is claimed where in Russia. So naturally, what is the total income? 4,23,000. Able to understand? Under ATC, this one point we need to check. Life insurance premium paid, right? You can claim deduction. Sorry. Yeah. This is actually a default tax regime. So no deduction at all. ATC. No question of ATC deduction. So which means naturally 4,23,000 is the answer. Residential status is non-resident and total income is 4,23,000. Wait. She is a non-resident. Yes or no? Because 182 days not satisfied. Even if the total income excluding foreign sources exceeding 15 lakh, she didn't stay for 120. Therefore, she is a non-resident. So non-resident, and non-resident is taxable only for income accrued in India or received in India. Accordingly, total income taxable is 4,23,000. ATC is not available because it is a default tax regime. If it is normal tax regime, she can claim ATC deduction even if the insurance premium is paid to a foreign insurance company. Doesn't matter. Whether the insurance company is an Indian company or a foreign company, doesn't matter. There is no such condition in ATC. ATC only talks about life insurance premium paid in respect of self, children, spouse. That's it. Whether it is paid to an Indian insurance company or foreign insurance company, no clarification on that. You can still claim. Are you getting it? Next. Can I proceed? Mr. Samir, aged 52 years, normal citizen, provides you the following information and requests you to determine advance tax liability within the due dates. I think for you advance tax is not completed. Okay, but it's okay. Okay, fine, I'll compute it and then just briefly tell you. Estimated tax liability 80,000, TDS is 12. So 80,000 estimated tax liability, TDS is how much? 12,000. So balance tax is how much? 68,000. There is a section called 209, 208 like that, which says that if the balance tax payable after reducing TDS is more than 10,000, advance tax provision is applicable. As per that, advance tax is applicable. And advance tax is exempted for one category of citizen, senior citizen having no business income. If a SSC is a senior citizen, does not have a business income, business or profession income, he is exempted from payment of advance tax itself will not apply. For remaining SSCs, if the balance tax payable after TDS is more than 10,000, advance tax. Here is a normal citizen at 52 years, So more than 10,000 rate, advance tax is applicable, and advance tax is to be paid in 4 installments. Okay, June 15th, September 15th, December 15th, March 15th. June 15 you must pay 15% of the balance tax. 15% into how much it is? 10,200. Then September 15 you should have paid at least 45. How much? 68,000 to 45%? 26,000? Array 68,000 into 45%. 30,600 minus already 10,200 paid now. How much it is? 20,400. December 15, 68,000 into 75%. Minus already 2 installments he paid. 10,200, 20,400 is equal to 20,400. March 15, entire 68 you should be paid. 68,000 you should pay by March 15. Total tax must be paid by March 15. But already he paid 10,200, 24, balance 17,000. These are the installments of advance tax. They just asked this question. What is the question? What is advance tax liability with due dates? Yes or no? You see the number 10,200, 20,400, 20,400, 17,000. Understood. This you will understand if advance tax class is completed. Able to understand. TDS, TCS, advance tax is in one session. So there you will get. TDS is over. Then fine. Are you clear until now? Then. Array 2 questions we completed already. 15 marks over. Another 10 marks over. 25 marks we completed within hardly 40 minutes. Easy or not? Next 3A. Okay, 3A, no, before solving, no, we will see what method. Compute the following. Oh, they are asking, it's a 6 marks question. Depreciation how much? Capital gains how much? Deduction available under 35. If at all he shifted out, means no default tax receipt. Okay, fine. Mr. Piyush runs a sole proprietorship firm and owns 4 missions which was put to use in 2022 March. Right now we are doing 23-24. The depreciation on these missions is charged at 15%. Okay. The written down value of these missions on 1st April was 7,70,000. Very important this point. 1st April written down value is what? 7,70,000. Suppose no, if the question says it is 31st March 2023, written down value as on 31st March 2023, WDV value if they say, then what you should do, 1st April value, how much it will be, minus 15% depreciation, then you will get opening value. Remember, WDV, written down value of a block, it means before depreciation. It means before depreciation. Suppose if the written down value was given on opening date, it means after depreciation of the last year. Suppose if written down value as on 31st March they gave, it means before depreciation. It means before depreciation. If at all they say clearly written down value as on 31st March after reducing depreciation, then take that value. Then take that value. Are you clear? By default, if at all they say written down value as on 31st March, what you should assume? You should assume that it is before depreciation. So how should you arrive 1 April to 1st April 2022 written down value? How you should arrive? Closing value minus depreciation for that year, full depreciation, then you will get closing value. That will be the opening value. Able to understand. That way also can be tested. But here lucky, directly they said opening value, which means we directly assume that it is after reducing depreciation. Yes or no? So what is the opening block value? Yeah, how much it is? 7,70,000. Depreciation, I will tell you, you will never make a mistake. In such a way, will tell you the logic of depreciation. Getting it? Many students will do mistake in depreciation computation also, especially when there is a purchase in the year, sale also there in the year. I'll show you in this. 2 of the old missions were sold on 15th July for how much? 10 lakh. Remember 4 were there. Only 2 were sold. Part of a block is sold. Hold it. Again, a second-hand machinery was brought. Always know, whenever there is a sale and purchase information, first you should consider purchase information. So there is an addition in the block, right? Second-hand machinery, correct? How much it is purchased for? 6,10,000. That you see 30th December. 30th December. When it was put to use, they didn't give. We assume that it is put to use for same on the same date. Less than 180 days. which means it is only eligible for half depreciation. Just remember that. Just remember that. Don't calculate depreciation right now. Then, so what is that value? 10 lakh, 6 lakh 10,000. 6 lakh 10,000. What is the subtotal? What is the total block value? 13 lakh 80,000 minus sale value of part of a block. Correct? How much is the sale value? 10 lakh? Correct, 10 lakh. Okay, 10 lakh. What is the written down value of the block? What is the written down value of the block? 3 lakh 80,000. Then from this you should reduce depreciation, normal depreciation, and you should also reduce additional depreciation. Then you will get what value? Closing block value. Are you clear? Closing value of the block means after reducing depreciation. Written down value of the block means before reducing depreciation. Now depreciation working note. What is the working note? 3 lakh 80,000 is the written down value of the block, right? Now tell me, when we sell any asset, no, what asset we will sell? We will sell the latest purchased asset or old asset? Means after selling, if still some value is there, that belongs to old assets or new assets. Simple logic. I have so much of assets. So much value is there belonging to so many assets. I sold assets. Generally, we sell assets, no, irrespective of question. Logically, when we are selling any part of a block, we sell the asset which we purchased latestly or the old assets. Which means from the value, like for example, we have a value of the total value of the block is how much? 13 lakh 80. 10 lakhs we sold, right? We assume this is very old asset or latest purchased? Very old asset we assume. Which means balance 3 lakh 80 is available for latest assets. Can I consider like that? Now latest I purchased it for how much? No? 6 lakh 10. Latest I purchased it for 6 lakh 10. But I have only 3 lakh 80. I have only how much? 3 lakh 80. So this 3 lakh 80, no, I should allocate it between new assets. Means assets purchased during the year. And if at all balance is there, opening WDV. If at all balance is there, then I will allocate it for opening WDV. New assets I purchased. Yes, I purchased. December 2023, I purchased it for how much? 6 lakh 10,000 I purchased. I should allocate this value for this. But I have value available how much? Array 6 lakh 10 is there. How much I can allocate? 3 lakh 80,000 only I can allocate. 6 lakh 10 I cannot allocate. Yes or no? I can claim depreciation only on the value available. Only on the value available I can calculate depreciation. This value available I need to allocate. Should I allocate it for the opening value or should I allocate it for the latest purchase asset? This is the question. First priority you should allocate it for the latest purchase assets. Latest purchase asset value is how much? 6 lakh 10. But value available for depreciation is 3 lakh 80. I can allocate how much maximum? 3 lakh 80 allocated. Correct? Now, is there any value for opening WDV? 0. Now, this value is available for less than 180, right? Into 15% into half. Whereas this is 15% full depreciation, 0. How much is the depreciation? 28,000. That's it. Now, whenever you have a depreciation computation, irrespective of question, first opening value figure out. Add additions. Less sale value of a part of a block. Part of a block is sold. What is the sale value? Reduce it. Straight away sale value, reduce it. Sometimes they will give you an exam. What is the book value for that also? Book value is irrelevant in income tax. Under block of asset, when you are calculating depreciation, when you are reducing, when you are considering sale of part of a block is sold, right? What is its WDV value? Irrelevant. At what price is it sold? Sale value is only relevant. From the block, what I will reduce? Part of a block sold, right? Sale value I will reduce. I will not reduce the book value. Are you getting the point? In exam, they will give you book value of those two missions. Ignore. Now, what is the balance value available for depreciation? How much? 3 lakh 80. Which means you can calculate depreciation only on 3 lakh 80. Now the question is, on 3 lakh 80, this year I purchased 6 lakhs worth of asset, which is eligible only for half depreciation. Opening value is eligible for full depreciation. All that is there, right? Now this 3 lakh 80 you should allocate. Is it for the latest purchased asset or old asset? Generally, after old assets are sold, any value is left. That value I naturally assume that it is belonging to latest purchased assets. Correct? Now, in our example, less than 180 days I used is the most latest asset. Asset used for more than 180 is old asset compared to less than 180. Opening value is very old compared to more than 180. Correct? First I will allocate for less than 180. Less than 180, how much value is there? 6 lakh. But value available for depreciation is 380 only. So 380 only I will allocate. Suppose no, less than 180, 2 lakhs only there. Value available for depreciation 380 is there. Total value of assets purchased during the year which is used for less than 180 is only 2 lakh is there. 382 I will allocate. 180 I will allocate to more than 180. If still value is there, then opening. Opening 15%, more than 180 15%, nothing but full rate. Less than 180 value, half rate. Here more than 180 is not there. So 380 I allocated for less than 180. Less than 180, how many worth of purchase? Assets I purchased. 6 lakhs assets worth of asset is purchased. Yes or no? So 380 allocate here. Is there any value left? 0. So how much is allocated for opening? 0. On 0 full depreciation, on 3 lakh 80 half depreciation. Rate of depreciation 15% into half, 28,500. Understood or not? I hope you got clarity on depreciation now. Any problem you apply this logic, you will get a correct answer. Getting it? It's not more than 180, less than, no confusion. Value available for depreciation allocated. Suppose if the question is full block is sold. Suppose here no, entire block is sold for 10 lakhs. Entire block is sold. No question of depreciation. Straight away it's a short term capital loss. Yes or no? If full block is sold, either short term capital loss or short term capital gain. If part of a block is sold, either depreciation or short term capital gain. Able to understand? Yes, fine. So depreciation is 28,500. Further, Piyush has given the following particulars. By the way, claim of depreciation how much? 28,500. What is the capital gain? 0. Capital gain is not applicable in this case. Only one block is that block is still existing. Value is existing. Depreciation is computed. So capital gains will not arise. Section 50 will not apply on a particular block, either 32 or 50. Mutually exclusive. Correct or not? Deduction available under 35 if he shifted out of tax regime. Payment made to U University approved. 15 lakhs you will get 100% deduction. Payment made to Satyavati College, they didn't give approved institution and all, 0. So how much is the deduction? 15 lakh. That's it. So what is the answer? 28,500. No capital gains arises. 15 lakhs is the 15 lakhs is the deduction. That's it, over. Correct? Easy or not? That's it. Next. Just 2 minutes. Yeah, we'll proceed. 3B, part B. If at all this is solved, entire MTP is over, excluding choice. This income tax part, okay? Next. So, by the way, this is completely, I think, capital gain problem. Default tax regime is irrelevant because capital gains provision is not there in DTR 115 BAC, correct? Next. Mr. Asif bought a vacant land for 80 lakhs in 2005 March, means 2004-5. 2004-5 March. Sometimes accidentally students might interpret as a 5-6 and index number 5-6 they will apply. Okay, careful. Registration and other expenses were 10% of the cost of the land. General registration expenditure, everything will be incurred by buyer, which will be added to cost of acquisition. 80 lakhs plus 10% means 8 lakhs. Total cost of acquisition is 88 lakhs. Correct? He constructed residential building on the said land for 100 lakhs in 6-7. Cost of improvement how much? 100 lakhs. Which year? 6-7 year. Yes or no? Then he entered into an agreement for sale for the above said house with Hari, who is not a relative, in July 2023. Okay. The sale consideration was fixed at 600 lakh. Means sale value is how much? 6. Full value of consideration is how much? 600. Let's keep it aside. We don't know. SDB we need to see. And on the date of agreement, Asif received 20 lakhs cash as advance in cash. We don't calculate SDB on the date of agreement. The stamp duty value on the date was 620. Not relevant. Yes or no? The sale deed was executed and registered on 10th February. Stamp Valuation Authority has revised the values and the value is 670 lakh. So SDB is how much? 670, which is more than 110%. Therefore, SDB 670. Correct? 670 lakhs means 6 crore 70 lakh. Correct? Minus transfer expenses we need to see. Then Asif paid 1% as brokerage on sale consideration. Consideration is 600 lakhs. Means, yeah, 6 lakhs is the transfer expenses. Correct? 6 crore is the sale consideration into 1%, 6 lakhs. So net consideration is 6 lakh, 6 crore 63 lakh, correct? Minus indexed cost of acquisition, indexed cost of improvement, indexed cost of acquisition 88 lakh multiplied by 348 during the year divided by 4/5 year 113, correct? 6 lakh 64, okay, I'm just testing you, fine. Next, fine, 88 lakh multiplied by 348 by 113, how much? Array 1 crore 27, 88 into 348 by 113. Always first apply denominator and then multiply. 0084 884. Okay, 00. Okay, understood. 2 crore 71 lakh 80. That's okay. 5 rupees or 4 rupees, it's okay. Value correct, nearest. Then fine. Even up to 1000, it's okay, no problem. Then cost of improvement 100 lakhs multiplied by 348, year of transfer divided by year of improvement 67, 122. How much it is? 2 crore. 1 minute. 24,000. Appa, 5 and 9. Okay, ma, fine. What is the long term capital gain? 4. 1 minute, ma. 1. Correct? Amma. 107 74 526. First we will see what question they are asking. Compute capital gain only. Amma, thank God. 1 crore 7 lakh 74,526. We'll see the answer. I hope it should be right. 1 crore 7 lakh 74. Correct. Question is not over. You see, subsequent to sale, Mr. Asif made investment in NHI 45 lakh on 29th. 29th May, 15 lakh on 12th July. Okay. Now you know 6 months from the date of transfer. 10th February to 6 months means what? March, April, May, June, July, August also there. Okay. So 45 lakhs, 15, both are eligible. 60, but maximum deduction. So minus 50 is equal to 57.74. That's it. Correct? 107 minus 50, 57.74. Answer is over. Capital gains is easiest to compute. When you're reading, no, it appears very complex. So many were there. But you see, most of the capital gain problems are easiest to compute. Yes or no? Over. MTP1 is over without choice. Now with choice also we will solve. Next. Can I? Vijay Prasad, a non-resident, aged 50 years, furnishes the following information of income from India for the year 31st March 2024. Income by way of salary computed 2,75,000. By the way, first, what is the question? Non-resident, ma? Question what? Compute tax liability, assuming that he opts out of default tax regime. Non-resident basic exemption is 2,50,000 only. Remember, non-residents age and all doesn't matter. 2,50,000. Okay. Salary 2,75,000. Short-term capital lakhs. By the way, he is opting out. Means default tax regime not followed. Means optional tax regime. Yes, short-term capital loss. Business income retail, wholesale set off 20,000. Correct? Correct? Next, brought forward business law 1,35,000 is there. We will see. We will see. Long-term capital gain on sale of building 2 lakh is there. Short-term capital is 185. I will set off. So what is the balance capital gain? 15,000, which is also LTCG. Lottery winning gross, fully taxable. Contribution to Provident Fund and NSC. Income of minor daughter from special talent, not subject to clubbing. Correct? Not subject to clubbing. Yes. No. Wait. Ray, what happened? Then we still have business loss. We still have business income how much? 20. Whereas business loss brought forward is there 135. I will set off. Balance business loss 1,15,000 I will carry forward. Correct? So which means 2,75 salary income, 2,75 salary income, short-term capital set off over, business income set off over, wholesale business set off over, brought forward set off over, long-term capital gain 15,000. Add it. 2,75 salary, long-term capital gain 15,000. Correct? 2,90. Correct? Winnings 45. Add it. How much? Gross total income is 3,35,000. Next, 8 is a contribution to Provident Fund and NSC. How much it is? 1,85,000. Now here, when you're doing this, don't jump like this. 335. Normal income how much? 2,75,000. Special income how much? 45,000 and capital gain 15,000. 275. Total chapter 6 cannot exceed 275. This checkpoint you should always keep. Suppose what if normal income is 140 only? Then chapter 6 cannot exceed 140. This checkpoint you should always keep. Yes or no? In this answer, without checking this also, it is right only. No problem. But you should check carefully always. Yes or no? Now 1,85,000 is the right. Special income. Long-term capital gain 15,000. And lottery how much? Balancing figure? Array 1,25,000. Basic exemption 2,50,000. Unutilized basic exemption 125. Unutilized can be set off against long-term capital gain first to 20%, then 111A. You should not do for non-resident. In this question, the SSE is unutilized basic exemption limit concept is not available for straight away 20%, straight away 30%, 3,000 and 13,500, both 16,500 plus 4% is equal to. That's it. The answer straight away. Are you clear? Easy or not? Yeah. Next. Return of income over for you. Fine. We will see. Mr. Kailash, a resident and ordinary resident in India, could not file his return of income for assessment year 21-22 before due date prescribed under 139 subsection 1. Advise Mr. Kailash as a tax consultant. What are the consequences for not filing return within the due date under 139? Consequences are what? See, 234F 5,000 rupees penalty. Yes or no? That's what? Late filing fee, that is. Interest under 234A till the date he filed the return of income. Moreover, losses under PGBP, capital gains, income from owning and maintaining race horses, and very simple. 71B. Sorry, house property you can carry forward. Unabsorbed depreciation you can carry forward, irrespective of filing the return. Correct? Then 72. PGBP, 73 speculation, 73A specified business, 74 capital losses, 74A loss from owning and maintaining. These you cannot carry forward. 234A interest is applicable until you file the return. 234F late filing fee is applicable. Yes or no? So interest under 234A, fees under 234F, carry forward and set off of losses. All the three provisions they wrote. Yes or no? Because of not filing return, one more consequence is there. Cash withdrawal, TDS rate and all higher. So many you can write actually. Moreover, TDS, if you are non-filer, rate of TDS on you will be higher. 206. Yes or no? Yeah, but that and all not required. They only ask from return of income point of view. Understood? Next. Mr. Naksha has undertaken certain transaction during 23-24 which are listed below. You are required to identify the transaction where quoting of PAN number is required. Payment of LIC of 40,000 in financial year by account payee check. Since it is paid by account payee check, no need to specifically quote the PAN number. Payment of 1,10,000 for RBI. Acquiring bonds, you must quote more than 50,000. Applied for credit card, must. Payment of 1 lakh by account payee check to travel for Singapore, no need because it is already by account payee check. Are you clear? Anywhere account pay check is used, obviously no need to quote PAN number separately. Understood? So no here they gave a reason that it is less than 50,000. Since it is less than 50, whereas here it is more than 50, right? Travel more than 50. Yes or no? So no, since the amount was paid by account paycheck, not in cash, quoting of PAN is not mandatory. This reason can be applied for everything. Moreover, payment is exceeding 50. Actually more than 50, payment exceeding PAN is required. But since it is paid in account paycheck, no need to pay. Here also we can apply the same logic, no? Yes or no? Anyhow, I will cover return of income chapter, there I will tell you, revision. Payment of 1 lakh for RBI, since it is more than 50,000 worth of bonds, you need to have a PAN number. Applied to SBI, you need to have. Today acquiring securities, shares, everything is online. Obviously PAN number is required. Yes or no? All of you. That's it. With this MTP1, questions are completed. Descriptive is completed, MCQ both are completed. So let's begin. MTP2 related MCQs, okay? MTP2 related MCQs. Yeah, look at here. And yeah, Mr. Ashish, yeah, kindly come back. Mr. Ashish was born on 1st April 1964. Appa, very critical. April 1964 means 31st March 2024, 60th birthday is completed. Getting it? He is a senior citizen. He is a senior citizen. As on 31st March, if at all he completed 60th birthday. Best example, 1st April, if at all his birthday is coming on 1st April 2024. 60 completed, 61 entered. Which means 60 completed on 31st March 2024. Which means he is a senior citizen. Understood? Furnished is return of income for the assessment year 24-25 on 10th July 2024. Okay. He has paid tax. 10th July furnished means within the due date. He filed it within the due date. He has paid tax on a default tax regime. Okay. He has shown the following income in the original return, default tax regime. Salary computed how much? 10.5. Interest from savings bank account 15,700. Interest from FD 50,000. Remember, he has gone with DTR. If at all he didn't go with DTR, 80 TTB. How much reduction? 50,000 he would have got because he is a senior citizen. Yes or no? 50,000 reduction he would have got. During the year 23-24, he paid interest on loan 2,50,000 for purchase of self-occupied property. Since it's a purchase question, pre-construction period logic and all will not come into picture. Correct? So 2,50,000. Since it's a self-occupied property, under default tax regime, he didn't claim deduction. If it is a normal tax regime, he would have got. Next, he contributed 1,50,000 towards PPF. 80C. He paid health insurance premium 40,000 by account pay check for self and wife. 50,000 limit is applicable. Senior citizen, 40,000 medical premium is allowed. He paid 2,200 in cash for his health checkup and 4,000 by check for preventive health checkup for his parents. For both of them put together, how much you can claim? 5,000 only. Okay, let's keep that on the paper. Okay. So 80D for self, how much premium he paid? 40,000. Yes or no? For preventive health checkup, how much he paid? 2,200. Correct? Yes. Next, parents, how much he paid? 4,000. Preventive health checkup for parents is 4,000. Next, he also paid medical premium 29,000 to ensure the health of his mother aged 80 years. So 29,000 for mother eligible, right? 29,000 he paid, mother eligible. Next, he further incurred medical expenditure of 18,000 for his father aged 81 years who is staying with him. His father is not having medical policy. Condition satisfied. If you don't have medical policy for your parent who is a super senior citizen, yes or no, you can incur. Yes or no, how much you can incur? Up to 30,000 medical expenditure. But how much he spent? 18,000. Entire 18,000 he can claim deduction. Correct? Now, how much is the total deduction until now? 29 plus 18. 49 minus 2. 47. 47,000. Now this 4,000. Here no. I will give 2,200 allocation. Balance here, how much it is? Anyway, you can allocate. Suppose out of 4,000, 3,000 I will claim here. So here I can claim only 2,000 because preventive health checkup both put together cannot exceed. Here it cannot exceed 50,000. Total limit is 50. 47 premium plus expenditure, 4,000 preventive health checkup but restricted to 3,000. 50 he claimed. Here it is 42,000. So total ATD is 92,000. ATD total deduction is how much? 92,000. Correct? All of you. Next. It's not how many problems. I told you very clearly. Provision clarity. ATD for self and SSC family children 25,000. For parents 25,000. If senior citizen 50. Senior citizen 50. Obviously. Preventive health checkup for both the categories put together 5,000. Preventive health checkup alone can be incurred in cash also. That's it. Provision is over. Clear? Next. He met one of his friend Ashwin on 1st February 2025. When he met 2025 1st February, 23-24 is over. 31st December is the maximum date. Yes or no? December is also over. Then he went to the next year, 2025 1st February. While discussing with his friend told him that default tax regime under 115 BSc is not beneficial to him. Actually correct only. Maybe it is correct only. He advised him to revise the return of income and shift out of the default tax regime. Can he revise the return? Suppose he filed original return with default tax regime. Can he revise the return first of all without default tax regime? He can revise. Provided the revision is by 31st December. Provided the revision is by 31st December. But here his friend told him on 1st February. 31st March is the financial year is over. Assessment year 31st December is the maximum date. 1st February his friend told him he cannot revise. However, Ash's son, who is employed in accounts department of a company, is of the view that once tax is paid under 115 BS in original return, it cannot be changed in revise. False. His son is wrong. Even though you claim a default tax regime, you can revise the return by choosing normal tax regime. That's absolutely permitted. It must be revised within the time limit permitted. 139 subsection 5, revise the time limit. From the information given above, choose the most appropriate answer. Okay. Now, what is the total deduction under chapter 6 allowable to Ashish if at all he is not choosing default tax regime? ATD we computed 92,500. Yes or no? ATC 1,50,000. ATD 92,500 and ATTTB 50,000. What is the total amount? 2,92,500. Is there any other deduction? Nothing. Sorry. 2,92,000. 92 only, no? ATD. Just a minute. 92 only, no? So 150, 50 plus 92. 2,92,000. How much is the answer? 2,92,000. That's it. The answer is C. Clear? All of you. Next. What is the total income under normal provisions? Normal provisions means you should first look at is how much is the total income. 10.5 lakh salary, interest from savings. First gross total income will compute. First gross total income is equal to, you just do one thing, 10,50,000 plus 15,700 plus 50,000. Yes or no? Minus 2,92,000. 2,92,000 is the total chapter 6 deduction. Gross total income is 11,15,700. Gross total income minus 292 is equal to normal total income. How much? 8,23,700. Just a minute. Hey, just a minute. House property we computed. House property. Normal tax regime, you remember SOP. SOP, 2 lakhs reduction is there, right? Normal, we discussed that point also. Under default tax regime, you don't claim. If it is normal tax regime, we claim deduction. And when we claim deduction, SOP, purchase purpose, 2 lakhs is the maximum limit. NAV 0 minus 2 lakhs, loss from house property, 2 lakhs. That can be set off against salary. Even other sources, anywhere you can set off. Now 8,23,000 minus 2 lakhs you do 6,23,700. That's it. The answer is B. Are you clear? Yes or no? Actually they did good. The options are very good actually. If at all 823 is there in exam, everybody will put 823. 823, since it is not there, you once again go back and see the question. Are you clear? All of you. That's why always know every information you see, put on the paper when you're solving like this MCQs. So when they're asking this question, you can easily set off. If at all you didn't put on the paper, though you read it, though you understood it, there is a possibility of doing mistake. Next. Can Mr. Ashish file revise the return after the due date? Declare the income under the no. The answer is no. About 3 answers over there. We need to see. No, he cannot do since he is a salaried employee. Wrong answer. Mr. Ashish cannot revise for the assessment year. That is correct actually. Mr. Ashish cannot revise his return for the assessment year 2025. That is correct only. No, he cannot revise. That answer is correct. We'll see whether B is even more correct. No, though he can file revise return. No, that's wrong. Right away the answer is C, because he uses the word though he can file, means he cannot file actually. So the answer is C. Correct? So question number 1, CBC. Yeah, CBC. Correct. Next. Shall we? Yeah. Rajiv, an Indian resident, purchased a residential house property at Gwalior on 28th May 1999 for 28.5 lakh. Cost of acquisition before 1/4/2002. Fair market value as on 1/4/2001. But since immovable property, restricted to stamp duty value as on 1/4/2001. Correct? The fair market value and stamp duty value were 33.5 and stamp duty value. So cost of acquisition is straight away 32.4 lakh. 32.4 lakh. Yes or no? Next. On 25th March 2014. 25th March 2014. Rajiv entered into an agreement with Virat for sale of the property for 74 and received an amount of 3.9 lakh as an advance. However, did not pay the balance amount and Rajiv forfeited the advance. 3.9 lakh advance is forfeited. Forfeiture of advance. Earlier there is a section. Okay, forfeiture of advance before 1/4/2014. Before 1/4/2014. That advance forfeited will be reduced from cost of acquisition. If the advance is forfeited before 1/4/2014, that advance forfeited will be reduced from cost of acquisition. Yes or no? What about advance forfeited from 1/4/2014? That advance forfeited is straight away treated as income from other sources. It is straight away treated as income from other sources. Here it is forfeited before 1/4/2014. 25th March it is forfeited. Therefore, it is reduced from cost of acquisition. 99% students will miss this point. Getting it? It shall be reduced from cost of acquisition when you are computing capital gains on this. Remember this. Next. Ultimately on 15th April 2023 means current financial year. Correct? Mr. Rajiv sold the house property to Suras for 2.1 crore when the stamp duty value of the property was 2.33. 2.33 means 23 lakhs extra stamp duty value is there. Now should I consider STV or actual? STV I will consider if it is more than 110% of the actual. 110% means 2.31. Actual STV 2.32. So I will consider STV. Correct? Then information. From the information give the most appropriate answer. Very simple. So now full value of consideration. What is it? Full value of consideration 2 crore 33 lakh. Correct? Minus transfer expenses. Did they give any transfer expenses like 1% and all? Nothing. If at all transfer expenses were there, 1% will you apply on STV or actual consideration? Actual consideration. Stamped transfer expenses is applied on actual. Commission is paid to brokerage based on stamp duty value. Based on the price agreed with the buyer. Remember, many students by default, if at all transfer expenses are, they'll directly apply here. No, you should apply transfer expenses on actual consideration. In the given case, actual transfer expenses not given. So net consideration is what? 2 crore 33 lakhs minus indexed cost of acquisition. First, what is the cost of acquisition? 32 lakh 40,000. Correct? 32 lakh 40,000. Now, what is the amount forfeited? 3 lakh 90,000. What is the balance amount? 28 lakh 50. 28 lakh 50,000. Now, this will be indexed. This will be indexed. Current year index number 348 divided by base year. It was purchased in 1999. So, base year is 100. So, what is the indexed cost of acquisition? 90. 18,000. That's it, huh? That's it. What is the net income? Long-term capital gain? 1,33,82,000. That's it. Now we'll see the answer. From the information, what shall be the indexed cost of acquisition of the residential house property? Indexed cost of acquisition, they're asking. What is it? 99,18,000. The answer is B. Correct? All of you. What is the amount of capital gain in the hands of Rajiv? Capital gain is how much we have computed? 133,82,000. The answer is actually it's A, B. Obviously this is going to be C. So the answer is C. Correct? All of you. Typing mistake in the ICA book. Okay. 133,83 we computed. What is the amount required to be deducted by Suraj under IA? 1% of the actual consideration of stamp duty, whichever is higher. 2 crore 33 into 1%. 2,33,000. The answer is A. So BCA. BCA. That's it. Easy or not? All of you. Next. Third question. Third question and fourth question. Okay. Easy only, not an issue. Shall we? Mr. Sushil is a person of Indian origin residing in Canada. During the previous year 23-24, he visited India on several occasions, and his period of stay in total, remember he is an Indian origin. Indian origin means 120 days or more, 365 or more, 15 lakh, that logic will apply. But we will not apply 6 subsection 1A deemed resident provision. Deemed resident provision can be applied only to a person of Indian citizen, not a person of Indian origin. Correct? Next. So person of Indian origin visiting India. So on several occasions, okay, and his period of stay in total amount to 129. Oh, 129 days he stayed in 23-24. And his period of stay in India during past 4 years is 135, 115, 95, obviously more than 365. Obviously more than 365. He earned the following income during the year 23-24. Oh, what is the question? We'll see first. What is the residential status of Sushil for the assessment year 24-25, and what is his income liable to tax? Oh, his residential status and what is the income taxable? Both they have given. So first we need to see residential status. In order to see the residential status, Indian source income we should consider. What is Indian source income? Income accrued in India, income received in India, or income which is income from a business outside India but controlled from India or set up from India. All these three are considered to be Indian source incomes. 120 days more, satisfied. 365 days or more, satisfied. Person of Indian origin, satisfied. Visiting India, satisfied. 15 lakh criteria alone we need to check. Income received or deemed to be received, we will consider. Income accruing or arising or deemed to accrue, we will consider. Income accruing or arising and receive, income accruing, arising, received outside India from business controlled from India, considered. Income accruing, arising, received, all the three outside. This is a foreign income, not considered. What is the total of Indian income? Sorry? Since 11, 11 lakh 75, since it is 11 lakh 75, less than 15 lakh, he is not a resident. B1 less than 182, B2 less than, sorry, more than 120, more than 365, but less than 15 lakh Indian income. Therefore, he is a non-resident. Straight away the answer is where? Non-resident, here it is there. Non-resident, here also it is there. When it is a non-resident, when it is a non-resident, income, scope of total income, section 5, only if the source is in India, only if the receipt is in India, only these two taxable. Business controlled from India, not taxable. Business set up from India, not taxable. Since the SSC is a non-resident, correct? Now, how much is received in India? 2,50,000. How much income is accrued in India? 375. How much is received outside? This both received and accrued outside. Control is from India. Doesn't matter. That is not taxable for non-resident. Correct? This is taxable for global. Resident and ordinarily resident. Resident but not ordinarily resident. Only for them it is taxable. So 2,50,000 plus 375, it is 6,25,000. So here no, this is also not answer. Yeah, option is A. Understood. Very confusing question. For checking whether he is a resident or not, look, for checking whether he is a resident or not, this income is Indian source income. But for taxing, ultimately after deciding that he is a non-resident, this income is not taxable. Are you clear? By confusion, many will also compute this. They will straight away put the answer D. By mistake, they will put the answer D. That's wrong. Understood or not? So the answer for third question is what? A. That's it. Fourth question. Mr. Arora made the following cash withdrawals. The moment it is a cash withdrawal, 194 yen. Yes or no? And dates they have given, amounts withdrawn, banks also they have given. We'll see that. We'll see that. Which of the above banks are required to deduct a TDS on cash withdrawal made by Arora in the year, if at all he is filing return of income regularly? He is filing the return of income regularly. So lower rate of TDS will apply. Lower rate of TDS will apply. But thank God they are not asking what is the TDS amount. They are only asking which bank is liable to deduct. 194N is applicable for which bank? If he is filing regular return of income, if amount is more than 1 crore, only cash withdrawal is? Yes or no? If the SSC is filing regularly return of income, more than 1 crore only TDS is applicable. If the SSC is not filing return of income regularly, 20 lakhs. That information is very important. So here he is filing regularly the return of income, means more than 1 crore if at all he withdrawn from a particular bank throughout the year, TDS will apply. Now Canara Bank, you see 2 times he withdrawn, 7 point. Yeah, Canara Bank, they need to deduct the TDS. Repco Bank 60, Repco Bank 10, Repco Bank 20, Repco Bank again crossing 1 crore TDS. SBI 10, SBI 75 plus 15, 90 plus 10, just 1 crore. SBI not liable to deduct. When TDS will apply if the withdrawal is more than 1 crore. So Canara Bank and Repco Bank. Repco and Canara Bank. So option C. Clear? So fourth one, the option is A. Third one 3A, 4 is C. That's it. Easy or not? All of you. Next. So confident until now? Yes, just 2 minutes. Yes, MTP2 Jan 25 related descriptive paper will solve. Yeah, will solve. Question number 1 compulsory, 2 out of 3. Okay. Ashok. By the way, first we should always see what question they are asking. 15 marks question. You are required to compute total income and tax liability, assuming he opts out of 115, means normal tax regime. Always normal tax only you will get in exam. Default tax regime is not important at all. But by the way, that doesn't mean you should ignore it. I feel every student will focus only on default tax regime. That's the problem. Even in the ICA book also, study material also, everywhere they solve only with default tax. But in exam always they ask normal. If default tax regime, what they will test? Everything no deduction, no. What is there to test to the student? So optional tax regime is what? Something challenging, so that we can test student ability whether he learned properly the provisions or not. Clear? Now, directly 61 years, a resident individual, senior citizen, yes or no? So by the way, they are asking us to compute total income and tax liability both. Tax liability will have a weightage of 3 marks. 2 to 3 marks will be there for that step. Getting it? Next. Who is engaged in wholesale business of stationery products? Wholesale business. He is a trader, not a manufacturer. No additional depreciation. Yes or no? Provides you the following information for the year ended 31st March 2024. Additional depreciation will be only for manufacturing sector. So here they have is a wholesale business only. So there is no additional depreciation. Even if a new plant and machinery purchase, no additional depreciation. He is also a partner in one partnership firm. Okay. Interest on capital received from UBW at 14% in accordance with the deed 1,40,000. How much is taxable? Only 12%, because for the firm also how much is allowed? Only 12% is allowed for the firm deduction. How much ever deduction is allowed to the firm, that much is treated as income in the hands of the partner under PGBP 28 clause 5. Any interest or remuneration received from the firm by the partner to the extent deduction allowed to the firm. Yes or no? How much deduction firm has got? Interest and remuneration, that much is taxable in the hands of the partner as income from PGBP. So interest on capital, how much it is? 1,20,000 only taxable, correct? Because 1,40,000 is for 14%. Obviously for 12%, 1,20,000 proportionate, no need to calculate. Next, share of profit from the firm exempt. 10 subsection 2A. Share of profit from the firm is exempted. Salary as working partner fully allowed to the firm, which means entire fully is taxable. Salary from firm, both are taxable under PGBP only. How much? 1 lakh. Yes or no? Salary from partnership firm, where he is a partner, he is a taxable under income from salary or PGBP? PGBP. Salary, income from salary only when you have employer-employee relationship. Here you are a partner, you are receiving from your own business. It's a PGBP income. Yes or no? Interest from bank FD, net of TDS is 49,500. Gross it up. 49,500 by 10%, 55,000. How much it is? 55,000. Income from other sources, how much? Interest on FD, how much it is? 55,000. Correct? Next. Interest on savings bank account, 13,300. Interest on savings bank, 13,300. Remember, he is a senior citizen. 80 TTB deduction is applicable. Remember. Next. All these are considered, yes or no? Income tax refund received relating to assessment year, including interest of 1,400. Refund is not taxable. 1,400 is taxable. Interest on IT refund, correct? How much it is? 1,400. Next. Net profit from wholesale business, 6,60,000. Amounts debited in P&L includes the following. Okay, now they gave some workout. Okay, so we will do working note. Wholesale business. Net profit is how much? 6,60,000 as per P&L, correct? Depreciation as per books. I will add back always. Depreciation as per books. How much it is? 34. In exam, no, don't add back directly. First, always check. Is there any information given for depreciation? You check. WDV value is given separately. Therefore, information about depreciation accommodation is given. Therefore, add back. Sometimes what they will do, you know, the above depreciation is as per income tax, they will say. That time, will you add back and less again? No need to do any adjustment. WDV as per books, 0. When you're adding back, WDV as per books, 0. Not applicable, you will put. Why? The same is as per IT Act. Here, IT Act related information separately given. Income Tax Act related information separately given. That is why depreciation as per books I am disallowing. Why I am adding back? So that depreciation as per income tax I will compute freshly. That I will reduce. Understood or not? Next. Motor car expenses. Something is there. Municipal taxes for the shop, 7,000 they paid for 2.5 years. Okay. Payment for 1.5 year is made on 12th July. And for another half year was paid on 31st December. 43B, not paid within the IT filing due date. Not paid within the due date for filing IT return. Since it is not paid, yes or no, since it is not paid within the due date, that one installment is disallowed under 43B. Correct? So, 43B, municipal taxes, how much is? 3,500. How much it is? 3,500. 7,000 they debited to P&L. That is belonging to 2.5 years. Which means each half year how much? 3,535. 1.5 year is paid before due date. In the same year it is paid. Another half year was paid after 31st March. After 31st March you pay also, you will get deduction. Provided you pay within 31st July. IT return filing due. But he didn't pay within 31st July. He paid on 31st December. For this year it will be disallowed. For 24-25 you can claim this deduction. Yes or no? So 3,500 is disallowed. Correct? Car expenses I kept pending, ma. We'll see later. Because no, car generally whenever they give, personal is also will be there. That personal information when we get, no, that time we will add back. Clear? Then salary to manager by way of single cash payment, more than 10,000 in cash. 40A subsection 3. How much it is? 20. Entire 22,000 is disallowed. Next. Motor car. Okay, this point will keep ending. Motor car is acquired on 31st December 2023. Less than 180 days. Less than 180. And 20% is only used for business. Means here motor car expense 40,000 debited to P&L is there, right? How much is disallowed? 20%. How much it is? Car expenses. How much is disallowed? 8,000. Correct? Now let's calculate depreciation. Depreciation on car. When the car was purchased for what value? 6,80,000. This is one block. This block value is what? This is what block? Plant and machinery block, 15% rate. This is plant and machinery block, 15% rate. So 6,80,000 multiplied by 15% multiplied by 1/2 multiplied by 80%. Agreed? 6,80,000 value of the car. Rate of depreciation per annum 15. But since it is used for less than 180, 1 by 2. Moreover, 80% only used for business. How much is the amount? 40. Reduce. 40,800. This we need to reduce. Once again check it. 6,80,000 into 15% is more than 90 above will come. Into 1 by 2, 45 somewhere it will come. Into 80%, 40. Yeah, perfect. Somewhere approximately. Correct? So 40,800. Easy or not? Next. So car we considered. Correct? Salary we considered. This we considered. This we considered. This we considered. Now WDV of the assets. Computer printer. What's the rate of depreciation for computer? 40. What's the rate of depreciation for computer? Sorry, printer. 40 only. Yes or no? All computer and computer equipment put together rate of depreciation is 40. Opening WDV 2,40,000 plus 1,50,000 3,90,000 into 15%. 3,90,000 into 15%. 39,000 plus 5% is 90,500. 39 plus 19 58,500. Correct? How much? 58,500. Array 2,40,000 plus 1,50,000 multiplied by 15%. 58,500. Correct? Sorry. Wait a minute. 40%. Sorry. Yeah. How much it is? 40%. So 39,000 into 2. 78 into 2. 156. Correct. 1,56,000. Depreciation on computer 1,56,000. Correct? Very good. Alert. Next. So until now each and every amount we considered. Perfect. Now he owned a house property in Mumbai. Oh, that means we can finalize this income. No. What is his business income from wholesale? 6,60,000 plus 34,000 plus 3,500 plus 22,000 plus 8,000 minus 4,800 minus 156. 5,30,000. Correct? Once again check it. 660 plus 34,000 plus 3,500 plus 22,000 plus 8,000 minus 4,800 minus 1,56,000 is equal to 5,30,700. Now we'll substitute here. 5,30,700 income from wholesale business. Correct? 5,30,700. Agreed or not? Next. He owned a house property in Mumbai. He received arrears of rent. 1,35,000 minus 30%. House property. 1,35,000 minus 30%. How much? 94,500. Okay, LIC, PPF, ATD, ATG. Okay, fine. We'll see. So what is the gross total income? 1,20,000 plus 1,00,000 plus 5,30,700 plus 94,500 plus 55,000 plus 13,300 plus 1,400. 9 lakh. Correct? Everybody? 1,20,000, 1,00,000, 5,30,700. Once again total it. 94,500, 55, 13,300, 1,400. 9,40,900. Yes. Minus ATC. LIC for independence and allowed. How much it is? 60. ATD. PPF for his wife. By the way, that is also allowed. No. 90. PPF. 70. Okay. Full 70 allowed. No. Array, what happened? Public Provident Fund. ATC amount. Yes or no? Then health insurance premium paid by account pay check for self 35. He is a senior citizen. He is a senior citizen. 50 limit is there. Yes or no? How much it is? 35,000. 35,000. Next. Contribution towards Prime Minister. 80G. Category 1 donation. Entire flat 100%. 50,000. Correct? Everybody will forget 80 TTB. That is also 50. Why 50? Both put together interest is how much? 68,000 it is there. 68,000 it is there. Are you getting the point? All of you. So how much is there? 5,30,000. 5,30,000. Sorry, not this. Yeah, 50,000. Now what is the total income? 914,900 minus 60,000 minus 70,000 minus 80 35 minus 80 TTB 50 minus 80G 50. 6,49,900. In this, is there any QQB deduction? 10AA, 35AD? Nothing. AMT provision will not apply. Agreed. Normal rate of tax, senior citizen, 6,49,000. 900, correct? Yes or no? So straight away the tax amount is what? Very simple, 10,000 plus 1,49,900 multiplied by 20% is equal to 30,000 plus 4%, 31,200 approximately. Approximately. Hey, 1 lakh, 100 rupees only less, no. That's why I calculated 1,50,000. Hey, what happened? Correct, no? 10,000 up to 5 lakhs. Wait, I'll tell you, wait. Why? 649,900, no? Up to 5 lakhs. 149,900, I rounded off to 1,50,000. Into 20% is equal to how much? 30,000. Oh, 10,000, 40 plus 4%, which is equal to 41,600. Yeah, 41,600 tax computations. What happened? Okay, this is in exam, you will not have this much time also, remember. So 649,900, no, first 5 lakhs, keep it aside. Remaining 149,900 into 20%, how much it is? 149,900 means round it off to 1,50,000, man. Into 20%, 30,000 tax. Up to 5 lakh, what is the tax per senior citizen? 10,000 rupees only. 30 plus 10, how much? 40 plus cess, how much? 4%, 41,600. Over. Look at the answer. I hope it should be right. This is right. 530,700 right, correct? Income from firm 120 right, 1 lakh right. Income from other sources all are right. Abba 649,900 right. 41,580. We considered 41,600. That's okay, right only. Easy or not? 15 marks question, easy or not? Yeah. Yeah, we'll continue. We solved it in 14 minutes. Actually explaining you. Otherwise 10 minutes enough. Another 10 minutes for presentation. That's it. Able to understand. You must always have a clarity. Presentation, you must always have a clarity. When you read the question, how to present it you should be. When you're reading itself, solving should be there. Just that totaling alone you will not be doing. Totaling alone you will be doing while actually presenting the answer. Correct? Next. Yeah. Let's continue. Mr. Sudesh, a citizen of India, serving in Ministry of Finance in India, was transferred to Indian Embassy in UK on 15th March 2023. Indian government employee in India transferred to abroad for government work only. Yes or no? By the way, Sudesh did not come to India during the year 2024. Compute his total income for the year 2024. He is a non-resident, by the way, straight away. His income during the year was given as under 3 marks question only. Rent from a house situated at UK, received in UK, thereafter remitted to Indian bank account. Non-resident, so not taxable. Remittance to India is not received in India. It is received there only. Later fund transfer they did, not at all taxable. Salary from government of India, deemed to accrue or arise in India, fully taxable. Yes or no? Foreign allowance, 10 subsection 7 exempted. Any allowance granted to Indian national for services rendered abroad, straight away exempted. 10 subsection 7. Any allowances granted to Indian citizen by government of India for services rendered outside India, as you know, as a foreign national, nothing but that is straight away exempted. So what's the total income? 9,25,000. That's it. Answer over. We'll see. Of course, salary 50,000 flat deduction. Standard deduction is 50,000. Getting it? So 925, 875. You see here, foreign allowance is exempt, 10 subsection 7. Whereas salary from government is deemed to be received from India. 8,75,000 income from house property, because he is a non-resident, accrual there, received there. Straight away not taxable. Correct? That's it. Easy question. 3 marks is easy. Next. Sumit has submitted his income tax return containing certain losses and deductions in respect of 23-24 on 22nd October 2024 after due date. Suppose if the SS is a tax audit case, then 31st October is the due date. We will see whether he is a tax audit case or not. We will see. The due date for filing was 31st July only. After due date only, belated return. Under section 139, you are required to examine with reference to relevant provisions of income tax whether the following losses or deduction can be carried forward or claimed in subsequent years. Loss from business, not at all eligible to carry forward. There is a section called section 80. Section 80. The section says very clearly in the chapter 6 it is there. Set off and carry forward provisions, it is clearly given. Section 80 says loss under head 72, 72A, 73, 73A, 74, 74A. Under these 6 items, you can carry forward only if the return of income is filed within the due date. This point is mentioned in 80 section. This point is mentioned in 80. Once again, this point is affirmed in 139 subsection 3. Getting the point? Original section is 80. Now, business, you cannot carry forward. Unabsorbed depreciation, you can carry forward. Loss from house property, you can carry forward. Look at the answer. Unabsorbed depreciation can be carry forwarded. Business loss cannot be carry forwarded. Yes, the loss of 2,50,000 from let out property cannot be carried. That's wrong. The answer is wrong. House property loss can also be carry forwarded. Yes or no? He is paying tax under default tax regime. It is a let out property. For let out property, you can claim interest deduction. Interest deduction you can claim. You can't set off, but you can still carry forward. The answer given by them is wrong. Yeah, they said what? Let out property he cannot carry forward. You see here, the loss of 2,50,000 from let out property cannot be carry forwarded since he is paying under default tax regime. That's wrong. You can carry forward. You can't set off. One minute, will you wait? Can I give a clarification? In a default tax regime, interest under self-occupied property we can't claim. But interest on let out property, if the resulting figure is loss, can we claim, can we show that loss? Can we set off with other head? When we cannot set off with other head but can show the loss, what we can do? Carry forward. That is permitted. Under default tax regime, the restriction is there only for set off with other head. See, house property, default tax regime, only two points. Interest on self-occupied you can't claim. You can't claim, first of all, you can't claim. Self-occupied property, you can't claim interest at all. What about let out? You can claim. Sir, there is a loss after claiming. There is a loss after claiming. Don't refer, I will also show you the proof. Don't worry. After claiming, still there is a loss. That loss, can I set off with other heads? No, because it's a default tax regime. Can I carry forward next year? Absolutely. No restriction on carry forward in default tax regime. In default tax regime, house property loss restriction is only for set off with other heads, but not about carry forward. Yes or no? Under optional tax regime, self-occupied property interest you can claim, let out interest you can claim, loss from house property is possible, you can set off with other heads, but up to 2 lakhs. Remaining can be carry forwarded. In default, you can't set off also. You can straight away carry forward. The answer given by them is wrong. Able to. Carry forward, correct? Then I say book also it is wrong only. Then fine, understood. All of you. Don't interpret your analysis based on answer. That's why. First provision, then see the answer. If the answer is wrong, mention that it is wrong. Able to understand? Next. Third one. Enough. That provision enough. Come back. I already explained. No, later you see and then investigate. Next. Briefly discuss TDS provisions under income tax for the following payment. TDS provision. Mr. Shamsher, a resident, 65 years, senior citizen, has maintained 2 FDs in 2 different branches of HFC bank, working on core banking. Both the banks will be considered and seen. 194A. During the year, the bank paid 32,000 and 17,000 interest on these deposits. Senior citizen, 50,000 is the threshold limit. Under 194A, both put together 32 plus 17, how much? 49,000. Less than threshold limit, 50,000. Therefore, no TDS under 194A. Normal citizen, 40,000 limit. Senior citizen, 50,000 limit. Correct? Mr. Chetan, a pensioner. Pays 55 lakh during the year 23-24 to Gopi for a contract payment for reconstruction. Chetan is a pensioner, not a businessman. Therefore, 194C will not apply. 194R is applicable. No. 194M is applicable. 194 M, those SSCs which are paying contract fee, professional fee, all this, yes or no? If at all they are paying more than 50 lakhs in a year, they are liable to deduct TDS at 5%. Straight away how much? 5% on the 55 lakh. 2 lakh something. That's it. Look at the answer. Oh, here itself it is there. 49,000 does not exceed, so no TDS, correct? Not required to deduct. Here on 50 lakhs it is exceeding, so 5% under 194M has to be collected. Over. Amount also not required, because no, in the question if you see, discuss the provisions of TDS. Oh, you can calculate amount also, not an issue. You can calculate the amount also. On 55 lakh into 5%, 2 lakh 75. That's the answer. That's it. Easy. 2 more questions. We'll be finishing it. Third one. Can I? Mr. Yogesh. Okay, first, always. Yogesh, no. If you pay tax under default tax regime. Default tax regime means here house property information is there. Self-occupied property, no interest. Let out property, interest deduction can be claimed. But you can't set up with other heads. That's it. Yeah, very good. By the way, what is the question? Determine taxable income. Means total income they are asking, nothing but. Next. Yeah, can I proceed? Yogesh constructed a house in 1718 year with 3 independent units. Means the house is having 3 units. During the year 23-24, unit 1, 50% of the floor area. Means the house is having how many units? House is having how many units? 3 units. Unit 1, unit 2, unit 3. Yes or no? Unit 1 is 50% value, correct? 50% area. Okay, fine. We'll see what is that. Unit 1, 50% is let out for residential purpose at monthly. So unit 1 is let out property, correct? Then monthly rent is 20,000. Fair value, municipal value. So we'll comparison we'll see later. Rent of January could not be collected from the tenant and a note to vacate the unit. So this is actually 20,000 per month rent. So January month is unrealized rent, correct? Notice is also given. A notice was given to tenant. Yes or no? Rule 2DD. There is a rule. Rule 4. Yeah, rule 4. Yeah, rule 4. Getting it? So as per rule 4, any action must be taken against the tenant. Yes or no? Bona fide. Tenants must be bona fide. Steps must be. He should not be occupying other properties of the same SSC. Then you can claim reduction for unrealized rent. Correct? Fine. So, just a minute. 20,000 rent of January could not be collected and a notice to vacate the unit was given to the tenant. No other property of Yogesh is occupied by the same tenant, which means tenant would have been vacated. January month he vacated. February, March vacancy. February and March vacancy. January month he is stayed, but no rent is received. Correct? Fine. Unit 1 remains vacant for February and March. They gave information. Unit 1 is vacant for February and March, where it is not put to any use. Okay. Then unit 2, 25% of the floor area is used by Yogesh for business purpose. Unit 2, 25% used for business purpose. In such a case, it will not come under house property itself. That unit 2 will not come under house property head of income itself. Remember charging section. Provision to the charging section. The annual value of any property or any land at appurtenant thereto. The annual value is taxable in the year in which, taxable in the during provided. The annual value is not liable to tax if the business if the property is put to use for business or profession of the SSC. My own business, if I am using my building, that building is not liable for house property head of income itself. You will not compute annual value itself. Correct? So unit 2, any computation, municipal tax belonging to unit 2, interest on loan belonging to unit 2, repairs belonging to unit 2, everything will be proportionately claimed under PGBP. They will be proportionately claimed under PGBP as a deduction. Yes or no? Then unit 3, the remaining 25 used for residence, self-occupied. Remaining 25% is for self-occupied. Now house property income we will apply only on unit 1 and unit 2. All the expenses will be split between 3 units proportionately. Unit 2 related all expenses will be claimed as deduction under PGBP. Unit 2 related depreciation also you can claim under PGBP. Yes or no? Other particulars of the house full they gave, all the 3 units put together they gave, correct? Now municipal valuation 2,88,000, fair rent whichever is higher 298, but standard rent 278. So step 1, expected rent is what? 278. Expected rent is what? Expected rent is 2,78,000 into only let out portion you should take. How much? 1,39,000. Correct? So expected rent is 139. Step 1. Step 2, actual rent received we need to compute, no? So for let out property, GAV we are computing. Step 1, 1,39,000. Step 2, actual rent. 10 months it was rented. 20,000 multiplied by 10 minus 20,000 unrealized rent. What is the net value? Actual rent received is 1,80,000. 1,39,000, 1,80,000, whichever is higher. 1,80,000 GAV. Yes or no? This is for let out property. Now here vacancy is at that point I will not even think. Why? Step 2 answer is already higher. Already higher. If step 2 is lower, then I will think vacancy period rent I will add. Then if step 2 is higher than step 1, then actual step 2. But here already step 2 is higher than step 1. Vacancy period logic and all need not be applied. Sir, what is vacancy period logic? All that. Open my marathon and see. I clearly explained. Okay. So gross annual value is how much? 1,80,000. Correct? And coming to unit 2, it is not applicable. Coming to unit 3 also not applicable. Minus municipal taxes paid. How much? 30,000 paid by Yogesh. 15,000 here. 7,500 here. 7,500 here. Actually here I will not claim. Here I will claim not under house property, but under PGBP I will claim. Correct? Yes or no? PGBP I will claim. Net annual value how much? 1,65,000. Here not applicable. Here 0. Correct? Net annual value is nil, no, for SOP. 0 minus standard deduction 30%. 49,500. Whereas here it is 0. Yes or no? Whereas for business, no. Repairs how much they incurred? 7,000. 7,000 into 25%. 1,000 for business purpose. Actual repair only we will take. Section 30. 3030. Expenses relating to building. Actual repair expenditure. Actual municipal tax paid. Proportionately, because the business is used, the building is used for business purpose. So 7,500 municipal tax, 1,750 repair, both I will claim. Minus interest on loan. How much is interest on loan? Interest on capital borrowed for construction 90,000. 45,000 for let out. Yes or no? 22,500 for business purpose. 22,500 for self-occupied. But SS is going for default tax regime. Means I will not claim at all. Correct? I will not claim at all because default tax regime. Agreed or not? Agreed or not? Until now, clear or not? Okay. This is a combination of business plus SOP plus LOP. Our entire building related provision they are testing. Next, what is the income from house property? 70,000. Whereas SOP 0. So income from house property is 70,500. Whereas deduction related to house property used for business. Deduction related to house property used for business 31,750. 22,500 plus 7,500. Repairs, interest, all that you can claim under PGBP. Yes or no? 1,750. Repairs also you can claim under PGBP. Under PGBP standard deduction and that and all, not the actual expenditure only. You will claim. How much it is? 31,750. Now income from house property 70,500. Okay. PGBP income we will see. PGBP income did they give? Income from business is 2,40,000 without debiting house rent and incidental expenditure. So PGBP 2,40,000 minus 31,750. How much is the net income? Correct? Next. So this point is considered. Interest considered, repairs considered. All this is considered. Correct? Ground rent. Other sources. Ground means what? Vacant land. Ground. Yes, on cricket ground. Ground. That ground. Are you getting it? Ground means what? Vacant land. Which is taxable under other sources. 6,000. Other sources, correct? Other sources how much? 6,000. Fire insurance premium. This also. This is for the house only. Building fire insurance premium into 25% is used for business. 15,000 can be claimed as deduction under business. Another 15,000 you should claim for fire insurance premium. How much it is? 193, 250. Sir, what about fire insurance premium for house property? That's with 30% flat deduction. In house property, whether you pay for fire insurance or repairs, not and all, nothing. 30% standard deduction, interest on loan, only 2 deductions. Whereas in business, whatever actual expenditure you incur, that and all can be claimed as deduction. Correct? So, fire insurance premium is paid generally for the building only. Getting the building and stock put together, we will pay. Getting it? So, proportionately 25% is used for business, right? Entire house 60,000, proportionately 25% for business. You can take alternative assumption also. What assumption? Entire 60,000 insurance premium is paid only for the building portion and stock portion, because here they didn't give stock up, building up. Yes or no? So I will take an assumption like that and then claim entire 60 also for BGBP. That is also possible. That's an alternative assumption. Are you clear? General assumption is what? Insurance premium is paid for the entire building 60,000, but 25% only used for business. $15,000 will claim under PGBP. How much? What is the gross total income? 750. Now, is there any deductions? 115 BAC, na? So no deductions. 2,16,750 is the taxable income. We'll see the answer. What? Where we did wrong? 2,62,250. Just a minute. What happened actually here? 1 minute utilized. Okay. Other particulars of the house are as under. Okay, fine. There is a small mistake. Other particulars of the house are and. Other particulars of the house other particulars of the house are as under means probably the land is not owned by the SSC. Probably the land is not owned by the SSC. This we consider as income. This actually expenditure. This actually expenditure. Expenditure for land we don't consider in house property. Straight away 30%. Straight away 30%. Generally when we see, you see here the heading, you see here, other particulars of the house are as under means house related particulars only, all these. So fire insurance premium is also for building only, house only. So no need to take that assumption also. I told the alternative assumption, that is also not applicable. Other particulars of the house are under. Generally we didn't pay attention to this. So every line in the question is important. Other particulars of the house means entire the following are related to house only. House related rent means rent incurred. I think this point there's supposed to be clarity. Generally whenever we see ground rent, we assume it is an income. But here it is related to house. Ground rent means what? Probably we are only owners for the building, not for the land. Even then house property applicable, yes or no? Annual value of any property consisting of buildings and land appurtenant thereto, for which SSC is the owner. Means you may be owner only for the building or you are owner for both land and building. That's what the meaning of house property charging section. Yes or no? So SSC has taken land on rent, which means 1,500, 6,000 into business related deduction. Land is used for business, 25%. How much? 1,500. Yes or no? And other sources 6,000 will not come. Yes or no? 7,500 you reduce it. As a whole, net effect is 7,500. 2,62,250. That's the answer. Understood? Here we did a mistake because we didn't pay attention to this point. We didn't pay attention to this sentence. We did not pay attention to this sentence. If at all we paid attention to this particular sentence and read the answer, then our analysis would have been different. We understood that these are other particulars. Since these are other particulars, ground rent means we interpret it as income. But if you see other particulars of the house as below, But actually, no, ground rent, the point they gave, no, it is very difficult for anybody to imagine like this. Even if they give like this, we assume that ground rent means actually income. We don't know that the land based upon which the building was constructed is a leased land. We don't know. Yes or no? So be careful. So a new problem, new adjustment. Correct? Differently asked. Over. Can I proceed? All of you. 3B. Mr. Soham, a builder, entered into, Soham only, no? Yeah, a builder entered into an agreement on 1st April 2023 with a Mr. Aman to transfer 4th floor in Tower A of a new project for 1 crore 50 lakhs. Okay. He received 25 lakhs as advance in cash. So STV on the date of advance is not applicable. The stamp duty value on the date 1 crore 70 irrelevant. The sale deed was executed on 15th June. For the agreed consideration, 1 crore 50 is the agreed consideration. However, the stamp duty value on the date was 1 crore 75 lakh. Rate of registration only applicable, no? Discuss the tax consequences in the both hands. Let us look from Aman point of view. Who is a buyer? It's a gift for him, no? So 1 crore 50 worth of 1 crore 75 worth of SDV, I purchased it for 1 crore 50. It is more than 110% of the actual consideration. More than 110% means SDV minus actual is equal to gift value. More than 50,000 it is a gift. So in Aman hands, 25 lakhs is treated as gift. Correct? Now coming to Soham, he is a builder. Builder selling building means PGBP income. 43 CA, not 50 C. Correct? Under 43 CA, 1 crore 75 lakhs is treated as sale consideration and accordingly business income will be computed. Over. Answer 5 marks. Easy. Next, tax consequence. So as per 43 CA, consideration is more than 110%. Yes or no? In this case, sale consideration is taken as 1,75,000 in the hands of the Soham. Clearly you should write the provision, ma. 110%, all that logic you should write. Aman. So here it is. If the difference is exceeding higher of 50,000 or 10% of actual consideration, here difference is a more than 110% STV. So obviously agreement date is different from registration date. And on the date of agreement, no amount is received in advance. No amount of advance is received in other than cash. Therefore, date of registration STB only applicable. So 25 lakhs is treated as 25 lakhs. Accordingly, 25 lakhs will be taxed in the hands of Aman under income from other sources. 56 subsection to clause 10. Correct? It's easy. Now fourth question, Abba, very lengthy. 7 marks. We'll see what question. Compute total income if he pay tax under normal provisions. Thank God. And also losses to be carried forward. Total income you should compute, loss to be carried forwarded, and normal provisions of tax. How much is there? 7 marks question. Mr. Mohan, 30 years, submits the information for the income and expenditure for the follow. Okay. Mr. Mohan had a house in Delhi. During the year 2021, he had transferred the said house to Veena, daughter of his brother. Okay. Without any consideration, he transferred house to brother's daughter. No clubbing, no deemed owner, nothing. House property transferred to a relative. Okay. House would go back to Mr. Mohan after lifetime of Miss Veena. Revocable transfer. But if during the lifetime of the beneficiary, if the transfer is not revocable, it is still treated as irrevocable transfer. It is treated as what? Irrevocable transfer. And when you transfer any property under irrevocable transfer, income on that property is not subject to clubbing in the hands of the transferor. Correct? The transfer was made with a condition that 15% of rental income from the house shall be paid to wife. Our condition is there. No benefit shall accrue to the transferor directly or indirectly. Here benefit is there to wife indirectly. Exemption of clubbing will not apply. Entire income that is earned by Veena on the house property is taxable in the hands of the owner. Mohan, yes or no? Rent received by Veena from the property 6,50,000. Sorry. Yeah. So rent received how much? Gross annual value 6 lakh 50 minus municipal taxes paid how much? We don't know. So net annual value 6 lakh 50 minus 30%. How much it is? 1 lakh 80, 1 lakh 95. Interest on loan there. Partnership, Mohan shares, short term capital loss, interest on bank, all that is there. So interest on housing loan is not there. So how much is the income from house property? 4 lakh. This entire income is taxable in the hands of Mohan. Why? Transfer of asset is irrevocable, but there is a condition that benefit is to be there to the transferor. Any benefit is there, that is not a, see, revocable. What is not a revocable transfer? Condition number 1, it is irrevocable during the lifetime of the beneficiary. 2, no benefit directly or indirectly shall be available to the transferor. Here transfer is irrevocable during the lifetime of the beneficiary, but benefit is there to the transferor. Therefore it is not an irrevocable, it is a revocable transfer. Accordingly, income arising on the revocable transfer of asset shall be clubbed in the hands of the transferor. Yes or no? 61, 62, 63. These are the 3 sections dealing with revocable transfer, irrevocable transfer, all that. Clear? Next, Mr. and Mrs. Mohan forms a partnership firm with equal share in profits. Okay. Mohan transferred a fixed deposit of 50 lakh to the firm. Transfer of fixed deposit to the, he transferred it. No clubbing applicable. Yes, it is transferred to the firm. Common capital contribution. Possibility. Firm had no income. Firm had no income or no expense other than interest income which is received on the FD. Firm is receiving, what firm did? FD Mohan gave no for the firm as a capital. Firm also continued the FD. The firm is getting how much income? 6 lakhs interest income. That is firm income, correct? Firm distributed the entire surplus to Mr. and Mr. Mohan. Surplus means what? Share of profit. 0 tax. Correct or not? Surplus means firm would have paid on 6 lakhs tax. That is firm assessment. Firm would have paid on the 6 lakhs income 30% flat tax rate. Balance any surplus is that is distributed to Mohan and wife. It's okay. Share of profit received from firm is exempted. You see here what happened. Mohan gave a capital to the firm 6 lakhs like through an FD. Firm did not withdraw the FD. They continued the FD. Firm continued the FD. How much income firm has got? 6 lakhs. On that 6 lakhs, firm would have paid tax how much? 30%. After that, some surplus will be there, right? That surplus is again distributed to partners. Surplus distribution to partners. Share of profit to the partner. 10 subsection 2A exempt. Are you getting the point? Now, when Mohan transferred to the firm this money, is there any provision that attracts clubbing? No. Because it transferred the entire deposit. Suppose no, Mohan transferred only interest on the FD to the firm. Subject to clubbing. Transfer of income without transfer of asset. Listen, no. Transfer of interest without transfer of asset. Here FD itself is transferred. Cash gift. Not even gift, it's a capital contribution. How come you call it as gift? It's a capital contribution. Yes or no? On the capital, firm is getting income. That income after payment of tax distributed to partners. No tax consequence in the hands of the partner. Firm will have tax consequence, but for us firm details they are not asking. They are not asking for us firm details. They are asking only Mohan related income, correct? That's it. So in this problem, no treatment in the hands of Mohan. Correct? Next, Mr. Mohan hold preference shares in X Private Limited. Mr. Mohan is holding shares in X Private Limited. He instructed the company to pay dividends to Roshini, daughter of his servant. The transfer is irrevocable for the lifetime of the Roshini. Will it be subject to clubbing? Yes. Only income is transferred. Shares are not transferred. Transfer of income without transfer of assets. Section 60. Subject to tax in the hands of the transferor. The dividend received how much? 10 lakhs. It is taxed in the hands of the transferor. Income from other sources how much? 10 lakh. Correct? Section 60. This is section 61. Able to understand. Here, he told the company to pay only income. He didn't transfer the shares in the name of the servant. If shares are also transferred, not revocable throughout the year. Income is also transferred, then it is taxable in the hands of the servant only, not taxable in the hands of the transferor. Correct? Mr. Mohan has a short-term capital loss of 16,000 from property and a long-term gain of 15,000 from sale of property. Short-term capital loss can be set off with long-term. 1,000 rupees loss will be carry forwarded. Okay. Other incomes. Interest from savings bank account 2 lakhs. By the way, he is a senior citizen or no, normal citizen only. Interest from savings bank account 80 TTA. Yes or no? How much is that? 2 lakh. Income ma. 80 TTA 10. That we will reduce at last. Cash gift 75 received from daughter of his sister on the birthday. Received from nephew. Nephew is not a relative. 7 persons only relative definition. Spouse. Parents. Parents of the either of the. Yes or no? No. Spouse. Parents. Spouse. My parents. Spouse parents. Yes or no? And my parents brother or sister. Any lineal ascendant descendant. And spouses of the all the above. That's it. Correct? So gift received is taxable, no? How much it is? 75,000. Next, income from betting taxable 34,000. Correct? Income from card games 46,000. 46,000. 46,000. In loss from maintaining racehorse 74A carry forward. Because you can set off it only against income from owning and maintaining racehorses. 70, 71, other head, nothing, no permission, yes or no? Compute total income, over, answer over, almost. What is the gross total income? 14,55, 16,55, 1660, 1730, 1764, 1770 plus 40, 1810. Yeah. How much is that? 18 lakh 10,000. Correct? Minus chapter 6A, 80 TTA, 10,000. So net income is how much? 18 lakh. That's it. What is the total income? 18 lakh. If he pays tax under normal provisions, okay. We'll see the answer. Amma, thank God. Easy or not? All of you. Next. You're able to understand the logics. Next. Clubbing provision entirely is tested in 7 marks. Entirely clubbing provision only. Getting it? Next. Mr. Prince, a senior citizen, has reported total income of 1,90,000. One point I want to tell you, in exam, no, if you write analysis everything correctly, but in the amount column, amount is wrong. 0 mark for that. Even if you write analysis everything correctly, bracket you did computation also correctly. Suppose depreciation computation working note is there. Working note you mentioned correctly. But the main problem, you entered wrong amount by mistake, clerical mistake, 0 mark for it. Sir, I wrote working note correctly. Sir, in the bracket my computation process is correct only. No marks for it. What is there in the amount column only will be seen. Practical papers, this is how valuation will be done. I have made a video on how I say values. Getting it? Very recently, you can go through it. Practical papers, in the amount column, ultimately how much amount is reflected. That is only considered for allocating marks. Sir, in bracket, no, 6,50,000, 15%, 1/2, everything I applied correctly, sir. But outer column, by mistake, 9 I put instead of 0. It's a mistake. For examiner, is it a conceptual mistake? Is it a clerical mistake? Doesn't matter. It's a mistake. No marks. Clear for that step. Next. Fine. Can I proceed? Mr. Prince, a senior citizen, has reported total income of 1,90,000. Okay, total income after deductions. That means yes or no? He has claimed exemption of 50,000 under EC, long-term capital gain, and sale of house property. Okay, and deductions under chapter 150 for the previous year. Is he liable to file IT return? Yes. Very simple. Whether SSC is liable to file IT return or not, before giving chapter 6A, before giving 54 series exemption, if the gross total income is more than basic exemption limit, then the SSC is liable to file IT return. 1,90,000 plus add back 54 is 50,000, add back 1,50,000, approximately 340, 390 it will be. 3,90,000. Senior citizen, basic exemption is only 3 lakh. Since the total income of the SSC before considering deduction under chapter 6A, before considering deduction under 54 is exceeding basic exemption limit 3 lakhs, the SSC is liable to file compulsorily return of income. Correct? Examine with reasons whether the following statements are true or false. Assessing officer has a power to allot PAN to any person even though no tax is payable. Yes, 139A gave a power specifically. Assessing officer can allot PAN to anybody. Where the Karta of HUF is absent from India, the return of the income can be verified by any male member. No, next adult member in the family, who can be male or female. 140. This provision is on 140. This is on 139A. Able to understand. Entire MTP2 is also over. Easy or not? Easy, no? Yeah. Yeah. So, this is actually September 24 attempt related. A suggested answer. First we'll solve MCQs. MCQs will solve. Miss Prerana, look at this. Miss Prerana is having residential house property in Nagpur, of which 1/3 is self-occupied, 2/3 is let out for commercial purpose at a monthly rent of 12,000. Okay, let's put that on the paper. Let's put it on the paper. So 1/3 is self-occupied, correct? 2/3 is let out. So GAV minus municipal taxes paid, NAV minus standard deduction minus interest on loan, correct? 1/3 is self-occupied, so NAV is equal to 0. For the remaining 2/3, what we need to do? GAV we need to compute. Fair rent for let out portion is only 30,000. For let out portion only they gave 30,000 per month. Actual rent is 12,000. Fine, we will see. Municipal value of the property was 2,40,000. For the entire property they gave municipal value. Standard rent under Rent Control Act was 3 lakhs for the entire property. Now you see, fair rent is 30,000 per month for let out portion only. Only for let out portion 3,60,000, right? For entire property it would have been much more higher. For entire property it would have been much more higher. And municipal value 2,40,000, whichever is higher fair value, but restricted to standard rent, which is 3 lakhs, which is also for the entire property. Now gross annual value, step 1 computation. Okay, 3 lakhs is decided, no? Expected rent is equal to 3 lakh. But into 2/3 portion only we should consider, which is 2 lakh. Step 2. What is the step 2? Actual rent received. Actual rent received how much? 12,000 per month. How much is that? 1,44,000, correct? Step 3. Step 1 or step 2? Actual rent or expected rent, whichever is higher. Expected rent how much? 2 lakh. But we will see whether there is any vacancy in the year or not. Okay, so 2,40,000 standard rent. She took a loan, she repaid the loan along with, there is no vacancy, which means whichever is higher. Gross annual value is how much for let out property? 2 lakh, correct? 2 lakh. Here it is not applicable, here it is not applicable. Then municipal taxes. So fair rent we considered, standard rent we considered, yes or no? Municipal taxes are 10% of the municipal valuation and are paid by her on 30th July. During there only she paid 10% of municipal value. Municipal value 2,40,000. 10% means 24,000. Again 24,000 2/3. 16,000, correct? Net annual value 1,84,000. So standard 30% means what here? 55,200. Then she took a loan of 45 lakh for the construction of this house from a bank on 1st April 2021. Construction purpose. Okay. She repaid the entire loan along with interest on 30th June 2023. Array, first time adjustment this time is. This type is first time. She repaid the loan in the current year itself. Though she borrowed in 2021, in the current year she repaid. Means in the current year, loan is outstanding only for 3 months. Current year interest is calculated only for 3 months. The rate of interest was 10% per annum. Shall we compute current year interest? Okay, so interest calculation. How much is the interest calculation? 45 lakh multiplied by 10% multiplied by 3/12. Current year interest how much? 1,12,500. This is current year interest. Fine. The construction was completed on 30th June 2022. This is relevant for pre-construction period interest. What is the pre-construction period? Pre-construction period here. She borrowed loan on 1st April 2021, but construction was completed on 30th June 2022. Construction completion before 31st March. 31st March 2022. Pre-construction period is 1/4/2021 to 31st March 2022. Exactly 12 months. 45 lakh multiplied by 10% is equal to 4,50,000. This can be claimed in 5 installments. 90,000 is the installment, correct? 90,000 is the installment. Now, installment, first installment 21-22, second installment 22-23. Right now we are doing 23-24. Third installment eligible to claim 90,000. So total interest how much? 2,500. Again, this is again splitted. Yeah, 1/3, 2/3. Remember, properties, let out and SOB both are there. 1/3 is how much? 2,500 into 1/3. 67,000. Balance 1,35,000. Now 67,500. Is this eligible for SOP? Construction purpose, 2 lakhs limit is there. Eligible. Suppose if it is a default tax regime, not eligible. Correct? If it is default tax regime, this amount she will not get. But what about let out portion 135? She can still claim. So 1,35,000 she can still claim. Correct? 1,35,000. Now here is the question. Is this default tax regime an optional tax regime? We don't know. That we need to see. Correct? She earns other income of 2 lakh. She earns other income of 2 lakhs during the year 23-24. She wishes to opt for default tax regime. Means opting for default tax regime means this amount is 0, 0. And what is this? 6,200 loss. Correct? So loss from house property 6,200. Can I set off with other heads? No. Default tax regime. Yes or no? We can only carry forward. Correct or not? Next. Based on the above information, answer the questions number 1, 2, 3. What is the net annual value? Net annual value how much? 1,84,000. Sorry, 1,84,000. Option C. Agreed. Deduction in respect of interest on loan shall be 1,35,000. Correct? Option B. It is not 202,500. Deduction allowed is only 135. Interest amount is 202,500. What is the interest including PCB? If that is the question, 202,500. What is the deduction eligible is how much? 135 only. Suppose sometimes I may ask you like this. What is the interest amount eligible for deduction if at all SS is not going for default tax regime? Then 202,500. Here SS is going for default tax regime. Therefore 1,35,000. SOP related portion we cannot claim. Then computer total income. Total income is 2 lakhs only. Other income is how much? 2 lakh. Is there any other income? Total income is how much? 2 lakh. There is no chapter 6 deduction. Yes or no? That's it. Straight away the answer is 2 lakhs. So the answer is 2 lakhs. The answer is B. Correct? Okay. So what are the answers actually? C, B, B. We'll see the answer. I think answers will be given all together in different. Yeah, fine. C, B, B. Correct. Clear? Easy or not? Next. Case scenario 2. You look at every answer we are deriving only through logic. Whereas answer is just matching. That's it. Based on answer, you should never interpret the question. Next. Case scenario 2. Mr. Desai, 52 years. He is an Indian resident. He gives the following information to you relating to previous year 23-24. Okay, profits, business, some online games is given, listed equity shares, gift is there, all that is there. He is opted to be governed by default provision. Okay, DTR he is going. Then questions were there. Okay, fine. Now we will see the questions. Okay. So he decided to go for default tax regime. So accordingly we will interpret the provision. Profit from business carried out in Dubai, controlled from Dubai. 13,10,000 received in a bank account in Dubai. Actually they said Indian resident and ordinary resident, all that they have not given. Okay, we will see that information. Okay. Loss from business in Delhi. Okay, for the time being let us assume that they are resident and ordinarily resident. Okay, so in such a case, you can set off, correct? What is the balance income? 8 lakh. What is the balance income PGBP? 8 lakh 60. Yeah, next. During the year financial year 23-24, he played some online games on a particular Indian website called game.com. Game.com is a manufacturer of men's shirts. During the year, Mr. Desai won 6 shirts. The cost to manufacture the shirts is 3,000 per piece, and where the company is selling the shirt at 10,000 per piece, excluding GST 18%. Which means company, whenever they're selling 10,000 plus 18%, they will collect whenever they are selling. But here the person who played this online game, he is getting 6 shirts at free of cost. 194 BA, 30% TDS will apply, if the amount is in cash. Here the amount is given in the form of shirts, which is kind. How much is the TDS applicable? TDS is to be calculated on the fair market value of the shirts. If a company is trader, like they're purchasing and then giving, then whatever the price at which they purchase, that is a value of the gift. That is the value of the lottery. If the company itself is manufacturing, getting, in that case, at what price it sells? At what price it sells to ordinary consumers? 10,000. That is treated as a lottery value. Now, the person who received the lottery, 10,000 per shirt, right? Multiplied by 6 shirts, how much? 60,000. GST is also gift only, na? But GST will not be considered. In 194 BA valuation, GST component will not be considered in the kind value. If the lottery amount is given in kind, GST component will not be considered. Amendments, it is there. Supplementary material, it is clearly given. In the supplementary book, it is clearly given. For example, I will show you right now. Yes, this is the supplementary material. How will the valuation of winnings in kind will be carried out? The online intermediary has purchased the winning before providing it to the user. Nothing but whatever I am giving you as a winning, I purchased and gave it to you. In that case, purchase price shall be the value of the winning. But in this case, actually they are not purchasing and giving, they are manufacturing. If the online game intermediary, if at all, manufactures such item and giving us winnings, in that case, the price that it charged to customer for such item shall be the value of the winning. At what price the online game company charges to customer? Generally 10,000. 6 into 10,000 is equal to 60,000. Further, it is further clarified that GST will not be included for the purpose of valuation of winnings. Valuation purpose, GST component will not be considered. Are you clear? All of you? Now, so remember, 60,000 is the value, multiplied by how much is the TDS rate? 30%, which is equal to 18,000. Correct? TDS rate is how much? 30% on 60,000 is equal to 18,000 is the TDS. Agreed or not? All of you. How TDS will be collected in case of kind? TDS we will not collect if the lottery amount is winning, which is in the form of kind. Complete amount is in kind. Then how TDS will be deducted? We can't deduct, no. We will ask the SSE to pay that 18,000 rupees as advance tax. Pay it as advance tax, challan. Show me the challan. Then I will release the 6 shirts. That is also given. You see here, according to where the net winnings are wholly in cash or in kind, and partly in kind, but the part of the cash is not sufficient. In these situations, very simple. If the winnings is in kind or partly in kind, whatever it is, and if the cash is not sufficient for TDS, the person responsible for paying the lottery amount shall, before release the winning, ensure that tax has been paid in respect of the net winnings. In the above situation, the deductor will release the winning in kind only after deductive provide proof of payment of that tax. That is challan details. Means the person who is playing the game, if at all he want to receive the 6 shirts, no, very simple. You pay tax to the department by a challan. Show me the challan that you paid the tax. I will give you. How much you should pay? 18,000 rupees, which is the TDS rate. Because now I am giving you shirts, how can it 30% of the shirt will I tear and give? No, right? Next. However, you see here again here. However, to play such game, Desai had to deposit a sum of 50,000 with the website for a refundable deposit. Many will think that TDS will be deducted from the refundable deposit. Wrong. What the circular says? Ask the SSE to pay the tax in the form of challan. and then produce the challan. Refundable deposit will be given fully refunded. 6 shirts will also be released only when the challans are given. Are you clear? Many will confuse here, thinking from the refundable deposit 18,000 will be collected and then the balance refundable deposit we will refund plus shirts also will be given. That's wrong answer. Are you clear? Next. On 23rd May, on 23rd May 2023, he gifted listed equity shares in Indian company to his son's daughter, Miss Shania. Okay, granddaughter, nothing but gift to granddaughter. No clubbing will apply. Correct? These shares were purchased by him on 1st April 2020 for 65,000. The market value on the date of transfer was 1 lakh. Shania sold the shares for consideration of 50,000. How much, at what price she sold? She sold these shares for consideration of 50,000 is the sale value for her, minus cost of acquisition is cost to previous owner. Previous owner cost is how much? 65,000 multiplied by indexation and all will apply. Fine, because we don't know what exactly question they are asking. He had taken a loan of 25 lakhs for the purchase of an electric vehicle. Electric vehicle means 80 EEB. Yes or no? Next, loan must be taken between 2019 to 2023. Yes or no? Electric vehicle, he had taken a loan of 25 lakhs for purchase of electric vehicle on 1st April 2022, which is there within the 31st March 2023. He paid 5 lakhs as interest, but how much reduction? 1 lakh. 50,000 is the maximum reduction, 80 EEB. He opts to be governed by default tax. Default tax means no chapter 6A. Next, based on the above, what are the answers? What shall be the total income of this? We need to compute now the total income. We need to compute now total income. Since they said resident, residential status information is not given. I assume that is a resident and also ordinarily resident. So what is the PGBP income? 8,60,000. Correct? Then he also played a lottery, right? How much is the lottery income? Lottery income how much? 60,000. How much is the income? 60,000. Correct? Income, right? They are asking income. And to his granddaughter he gave nothing, no clubbing, nothing, 0. This adjustment is not applicable. Correct? Next, electric loan related, all that is fine. So that's it. Total income how much is until now? 9,20,000. This is gross total income minus chapter 6 here generally 0. So 9,20,000. Correct? So is the answer there? 920. It is there. So the answer is C. Are you clear? Next, which of the following statement is correct in respect of deductions available? He is opting for what? Default tax. No chapter 6A. Correct? But we'll see. He shall be eligible for a deduction. Wrong. He shall not be eligible for a deduction irrespective of tax regime. Irrespective of tax regime. Wrong. He shall be eligible for 150 in respect of interest on loan only if he opt out of default tax regime. Yes. He shall be eligible for a deduction 50,000. That's wrong. So the answer is C. Are you clear? Next, what is the requirement of deduction of tax by game.com in respect of the winning? 5,400. There is no requirement. Wrong. 6,000. So the answer is 18,000. Are you clear? Game needs to deduct a TDS at 18,000. But as per circular, deduction is not possible here. What they need to do as per the circular? We need to ask the SSC DESI to pay the tax through department to the department, produce the challan, then only will release. Deduction concept will not apply. Technically, none of this answer is right. Are you getting it? Technically. But whatever option available, we selected A as the best answer. Are you clear? Then, so 4, 5, 6. Sixth one is what? A, we understood. Yes or no? Fourth one, CCA. Correct? Fourth one C, fifth one C, sixth one actually we selected A. The answer given is none of this is correct. Why? I showed you the reason. Challan has to be. Are you getting it? That's it. So if at all this option is not given in the exam, right, they will straight away consider this as a grace mark. 2 marks grace will be there itself. Understood? Because the question itself is wrong. Next. Seventh one, Mr. Sundaram owns 2 residential house properties in Chennai. One which is used by him and his family for the residential, means self-occupied property. Both the houses are exactly identical. Their expected rent and municipal values are also same. Two houses, one is self-occupied, one regarding one they have not given information. We'll see. He let out the other house. Okay, they gave information 1,15,000 per month. He took two similar loans for purchase of these two houses on 1st April 2022. The stamp duty value of these houses is 30 lakhs each. During the 23-24, he paid 4 lakhs as interest for each of the house. He does not have any other income or investment during the year. He did not file his return of income within the due date. What shall be his total income chargeable to tax? Now, regime also they have not given. We assume that it is optional tax regime. No, we should assume by default tax regime. That's what it's called, default tax regime. Which tax regime you follow? If nothing is given information, default tax regime. If it is default tax regime, house property loss, shall we claim deduction? Self-occupied. For self-occupied, we don't claim any deduction. If no information is given, we should assume that the SS is following default tax regime. Very important. This assumption plays more major role. Now, let's compute the income. So, two houses, right? House number 1, self-occupied. House number 2, let out. House number 1, the direct answer is 0. No more confusion. House number 2, gross annual value 1,15,000 into 12. 13 lakh 80. Municipal taxes paid, information given. Where they gave? No, they didn't give. So net annual value 13 lakh 80,000 minus 30%. 4 lakh minus interest 4 lakhs. Yes or no? Each of the house, how much is the interest? 4. 5 lakh 66,000. Correct? Now here they have here 4 lakhs interest is there for self-occupied also. Maximum deduction is 2 lakh. Here maximum will be 2 lakh. You can set off, and 366 is under optional tax regime. Whereas on default tax regime 566. So look at the answer. How much is the answer? 566. 366 also given. By mistake, students what they do? They set off and they decide the answer 366. If no information is given about tax regime, by default we apply default tax regime. When default tax regime is applied, automatically self-occupied property interest deduction can we claim? No. The answer is C. Understood. Next, 8th question. During the year 23-24, Mrs. Kali's 65 years received 10,50,000 as a family pension. She had spent 26,000 to get that income towards documentation and processing charges, all that. She does not have any other income. Assuming she is opting for DTR, what is the income chargeable? Family pension, 1/3 of the pension, or 15,000, whichever is lower. Yes or no? 10,15,000 minus 15,000. So 10,35,000 is income from other sources. 10,35,000. Option A. That's it. Yes or no? Section 56. Deductions under other sources. Family pension, 1/3 of the pension received, or 15,000, whichever is lower. Maximum deduction is 15,000. So 8th question the answer is A. 7th question the option is C. Are you clear? That's it. MCQ'S is over even with respect to suggested answer of September. You see, the paper which is considered to be very toughest, we solved it in 22 minutes with explanation. Yes or no? If I solve without looking at you, I will solve in 12 minutes. 12 to 13 minutes. Provisions command is, that is why very important. Read the provision carefully. Understand and imagine how to apply the provision correctly. It's not how many problems you solve in taxation. It's how much clarity you have in the provision. That is what ultimately important. Clear, all of you? I am honestly telling you, I never solve any problem in tax. I only see the provision. How to apply the provision I will think of. Getting it? Only the provision application I focus more. Problems under I hardly solve. And any problem you give me, I'll compute the right answer. 99%. Unless by overlook I may do wrong answer, but not wrong interpretation of the problem. I never did a mistake in taxation because of wrong interpretation. It's only because of maybe overlook we may do mistake. Maybe like one item we read, later I forgot probably that item to recollect. That kind of mistakes only I do basically. Provision related misapplication I never did. Provisions, if you understand thoroughly, any level of exam you can answer well. Clear? That's it. MCQs are over. We'll take a small break and then continue with the descriptive part. Yeah. Let's begin. September 24 suggested answers related question number 1. This is actually 15 marks question. See, 15 marks question, it is almost. Compute the total income and tax payable by Raman under default tax regime as well as optional tax regime as per normal provisions. So they are asking you to calculate total income tax under both default and normal. First we'll calculate under default. Side by side itself we'll calculate under normal. Getting it? I mean immediately. Or first DTR, then NTR we will calculate DTR income plus minus deductions. In DTR no deductions. In NTR many deductions. Yes or no? Which option is advantageous to Raman? They are asking. Fine. Shall we? Yes. You see the question almost 2.5 pages. It's okay. Nothing. Zuzubi. Yeah. Mr. Raman, a resident individual, aged 62, senior citizen, okay, engaged in the business of manufacturing, which means additional depreciation he will get. Sale of spare parts for motorbikes as a proprietor. He is a proprietary concern. He prepares his accounts on mercantile basis. Very good. Mercantile means accrual basis. This business is carried out on ground floor of a 2-storied commercial building owned by him. Okay. So 2-story is there. Ground floor he is doing business. First floor we don't know. We'll see what he did with the first floor. Is it rented or self-occupied? We don't know. The written down value of which is 8 lakhs as on 1st April 2023. You see, ground floor of a 2-storied building is owned by him. Written down value of which means full building or ground floor? Ground floor. English knowledge. Yes or no? So ground floor building opening WDV is how much? 8 lakhs. He prepares his accounts on accrual basis. The statement of P&L for the year ended on 31st March shows a net profit of 9 lakh before taxation and depreciation. Before tax and depreciation, what is the net profit? 925. After debiting or after crediting the following items, means instead of giving you P&L, vertical, horizontal format, they are giving you descriptive format. Are you clear? Means below there are so many items, right? If it is expenditure, they would have debited. If it is income, it would have been credited. Correct? If it is an expenditure, it would have been debited. If it is income, it would have been credited to the P&L. Correct? Now I will start income from PGBP. Income from business or profession. By the way, I am computing under default tax regime. Additional depreciation I will not claim. Scientific risk expenditure I will not claim. 3580 deduction I will not claim. That's it. Only these three? Yes. So net profit as per business or profession 9,25,000. So traveling expenses include 2,40,000 being expenditure incurred on a foreign tour to Taiwan for attending a business exhibition. Permitted. No restriction. Business exhibition you are permitted traveling, official expenditure, and meeting with vendors, out of which 40,000 rupees was incurred in Indian currency and 2 lakh was incurred in foreign. Doesn't matter. There is no specific provision on this. So doesn't matter. Mr. Raman has spent 10 days in Taiwan, out of which 4 days were utilized by him for attending marriage ceremony of vendor's son. Or a supplier's son marriage is business relationship. It is compulsory to attend. Yes or no? To have a healthy business relationship. It's a business expenditure. Is there any adjustment? Is there any expenditure disallowed in this? No. Zero. So foreign tour expenditure. What is the disallowance? Foreign tour expenditure. What is the disallowance? Zero. Are you clear? Administrative expenses include 9,525 towards interest on delay in deposit of GST. Interest on late payment of indirect tax is compensatory in nature. Allowed. It is allowed. Interest on late payment of income tax, disallowed. Interest on short payment of advance tax, disallowed. Interest on late payment of TDS, TCS, disallowed. That is not allowed as deduction. Already 9,525 rupees debited to P&L. After debiting only 925 came. Should I adjust anything else? No need. Next. Are you understood? Clear? General expenses include a sum 3,88,000 paid to non-resident as a fees for technical service without deduction of tax excess. 40 subsection A clause 1, 100% disallowance. Yes or no? 40A subsection 1, 3,88,000 disallowed. Yes or no? Fire insurance premium. Fire insurance premium 66,000 for the entire building. Entire building means ground floor is there, first floor is there. Are you getting it? Which is remaining unpaid till 31st March 2024. It doesn't matter. Fire insurance premium. Is there any 43B adjustment on this? No. Fire insurance premium you can claim on accrual basis. Correct? Huh? But how much is debited to P&L? 66,000, which is belonging to entire building. Actually, we are using for business how much? Ground floor. Only ground floor we are using for business. First floor, self-occupied, let out, something will be there, but it's not used for. To that extent, I should disallow. Because a non-business expenditure is debited to P&L. Debited means this profit, no, this amount, no, they calculated after reducing entire 66, but actually how much they should reduce? 33 only they should, but they reduce how much? 66. So 33 should be. Fire insurance premium belonging to first floor, correct? Huh? Belonging to first floor. Why are we adding back first floor? Because first floor is not used for business. For what purpose? We don't know. We'll see later. Correct? Huh? Expenditure of 75,000 was paid to Scientific Research Association approved, out of which 50,000 was utilized for purchase of land by Research Association. See, Research Association, what they are using, that's none of my business. I donated to Scientific Research Association. 35 subsection 35 subsection 1 clause 2. 35 subsection 1 clause 2, donation to a Scientific Research Association which is approved. For what purpose they will use it, that's none of my business. That is their business. I donated them. 100% deduction. But under default tax regime, no deduction. Yes or no? Minus, actually they debited, no? They debited to P&L, no? They reduced it while computing profit, no? But under income tax, you should not reduce while computing profit, no? So what you should do? You should increase. Donation to Scientific Research Association, 35 subsection 1 clause 2. How much it is? If it is normal tax regime, do we add back? If it is a normal tax regime, do we add back? No. But since it is a default tax regime computation, we are adding back. Next. He let out first floor. Appa, now house property information came. He let out first floor of his commercial building to Amman on April 1, 2023 and received rent of 35,000 rupees per month. Actually, if you see, this rent received is also credited to P&L. Yes or no? The statement of P&L shows net profit after debiting or crediting the following items. Since it's a rental income they would have debited or credited? Credited. Rental income is credited. Now tell me, this profit, no, after adding rental income 35,000 per month, that income taxable to PGBP, yeah? So we should reduce it because it is overstated by rent also. Minus rent on first floor. How much it is? 4,20,000. I will reduce it. Why am I reducing? Because that income is taxed under PGBP. P&L it is added. But no, it should be taxed under other sources. But already P&L considers this. To arrive business income, I should eliminate this. Correct? Huh? Municipal taxes of 20,000 related to the building were paid equally by both Raman and Amman. Appa. Municipal taxes paid. How much it is? 20,000. Municipal taxes paid how much? 20,000. Now this is for the entire house, no? Equally paid by Raman and Amman. Raman would have paid for his ground floor. Amman paid. Tenant paid for the first floor. Now let's compute in house property income also. House property. Gross annual value is 4,20,000. Agreed? Minus municipal taxes paid. How much is paid? 20,000. 10,000 by Amman. 10,000 by Raman. Raman is owner for Raman is using ground floor. 10,000 ground floor is belonging to business, right? This entire 20 already debited to P&L. Not 20, sorry, 10 only debited. Another 10 paid by tenant. Obviously it will not come in. It will not come in P&L itself. It will not come in P&L. Municipal taxes for first floor paid by tenant. In house property, will we get any deduction? No. So gross and net annual value is 4,20,000 minus 30% deduction 1,40,000. Sorry, 1,26,000. 1,26,000. Wait, interest on loan might be there. Who knows? You see, rent received was credited. Municipal taxes 10,000 was debited to P&L. Municipal taxes 10,000 paid by Raman for ground floor. Business purpose 30 allowed already. Already debited. All allowed. Moreover, no adjustment. What about rent credited to P&L? That is, rent is credited to P&L. It is taxable under house property. Now, to get PGBP income, I should eliminate this. So, we eliminated that. Yes or no? 10,000 municipal taxes is paid by Raman. That already debited to P&L. Already allowed also. Moreover, PGBP, ground floor, business purpose. Yes or no? What about house property tax per first floor? That is paid by tenant only. So, no deduction under house property. So, house property income is 1,26,000. Sorry. House property, no deduction. 30%. Is there any interest on loan? Raw material related details, Raman trademark related, car related, new machinery related, tuition fee related, health insurance related, so we can finalize this. So interest on loan, how much? 0. Interest on loan, 0. How much is the balance income? 2,94,000 is the house property income. Keep this aside. Now, still the answer is not over. He has sold a piece of land for 44 lakh on 12th April 2023. Okay, 44 lakhs he sold a land. That's a capital gain related income. He had acquired the land for 40 lakhs in January 2022. Jan 22, April 23, less than 24. It's a short-term capital gain. It's a short-term capital gain. The gain of 4 lakhs is credited to P&L. It's a short-term capital gain. P&L it is credited. You should reduce. Yes or no? Minus short-term capital gain. How much? 4 lakh you should reduce. Correct? This 4 lakh is taxable under capital gain. No? That also you should keep aside. Short-term capital gain how much? 4 lakh. Normal rates only it is taxable. No? Normal rates. Short-term capital gain 111A only 15%. This is a normal short-term capital gain. Not on shares. Yes or no? Next. CIA they gave to confuse you. It's a short-term capital asset actually. From date of purchase to date of sale, the duration, period of holding is less than 24 months. Clear? Next. Additional. Additional means what? Not related to P&L. It is not affected in P&L. Okay? Hardly 5 to 10 more minutes. We'll be completing this. Mr. Raman purchased raw material from Paul Industries, which is a micro enterprise. 43B clause H. 43B clause H. Correct? Clause H, MSMED Act. Any payments, any expenditure for purchase of goods and services from micro and small, not medium. Medium is not covered. If you purchase any goods and services from a micro enterprise or a small enterprise which are covered under MSMED Act, yes or no, you can claim deduction on accrual basis provided the amount is paid within 15 days if there is no agreement. Or the amount is paid within 45 days if there is an agreement. Correct? Credit period actually doesn't matter. If there is an agreement, written agreement is there between the SSE and the seller, which is a micro or small enterprise. 45 days is the time period. Within that, if you pay the amount, no, you can claim still on accrual basis. Suppose if there is no agreement, 15 days only the period. From what date you purchase the goods, the amount must be paid within 15 days to the seller, who is a micro, who is a small. If you do not pay within 50 days, or if you do not pay within 45 days, the amount will be disallowed and you will get actual deduction in the actual year in which you paid it. Actual year in which you paid, you will get deduction. 43B clause H, no relationship with IT filing due date. No relationship with IT filing due date. Remaining expenses, taxes, interest on loans from banks and FIs, railway payments, everything is linked with IT or due date. You must have remember all this. Okay, 43B H alone, if you don't remember, that's okay, I agree. Remaining provision you should have remembered, no, at least. 43B what? Even though SS is following mercantile, the following list of expenses will be given as deduction only if they were paid before filing the IT return or before the due date. But for MSMED related micro small payments, you will get deduction only if it is paid within 15 days or 45 days. If it is not paid within 15 or 45, disallowed for that year. Again, when I can claim deduction? In the year in which you paid? No. Look at the date of payment. That date comes under which year? Look at. For that year you will get deduction. Clear or not? Look at this carefully. Mr. Raman purchased raw materials from Paul Industries, which is a micro enterprise, for 49,000 on March 10, 2024. However, the payment to Paul Industries was made on April 5, 2024 by check. Actual expenditure is incurred in 23-24. Payment was made in 24-25. And you see, no written agreement existed between Paul Industries and Raman. When there is no written agreement to micro small enterprise, you should pay within 15 days. But he incurred on 10th April, but paid on April 5, more than 15 days. Means for 23-24, this expenditure will not be allowed as deduction. For which year he can claim? 24-25 he can claim. 23-24 he cannot claim. Yes or no? So this is probably this would have been debited in P&L. Probably this would have been debited in P&L. That point is not given. So naturally we assume that it is debited to P&L. 49,000 I will disallow. Correct? 49,000 I will disallow. Agreed. So payment to Paul Industries. Correct? Payment to Paul Industries. Since it is not paid within 15 days, it is disallowed. After 15 days it is paid. But that payment date comes under 24-25. Since it comes under 24-25, for 23-24 calculation, it is not allowed. It is disallowed. Understood or not? Then another supplier, Cull Industries, a small enterprise. Remember, micro and small, only those two are covered in 43BH. Medium enterprise is not covered. Actually, MSMED Act, if you see, Micro, Small, Medium Enterprises Development Act, all the three industries, micro, small, medium, all the three are applicable. But under income tax 43B clause H, only micro, small only covered, medium is not covered. Another supplier, another seller is there. Small enterprise with whom no agreement exists. No agreement means what? Within 15 days you must pay for payment. Okay? With whom no agreement existed for payment, was paid 1,34,000 in cash. It is paid in cash. On which date it is paid? Observe this point carefully. Beautiful adjustment. April 5th it is paid for purchase of raw material on March 31st. March 31st you purchased. Within 15 days you paid. You paid within 15 days. How you paid? Let's keep aside. Will 43B subsection H apply? No. 43B subsection H disallowance provision will not attract, because expenditure is incurred on 31st March, amount is paid on 5th April, amount is paid. 43B is talking about only payment date. Is the payment paid within the due date? Within 15 days if it is paid, yes, it is allowed. 43B subsection H will not apply. Now, since it is paid in cash, but when it is paid in cash? After the year end. For 23-24, you already debited to P&L on accrual basis. You already debited in P&L on accrual basis. For 23-24, you can claim on accrual. 43BH, will it apply? Will 43B sub clause H, will it apply? No. You debited to P&L on accrual, you can claim? Yes. 40A3. What is it? 40A3. Will it apply? No. 40A3 will apply in the same year if you pay in cash. But it is paid on April 5, 24, which means it is paid in 24-25, which means for 23-24, no adjustment. Disallowance will not apply. But 24-25, I will treat it as income. I will treat it as income. 40A subsection 3A. What is that section? 40A subsection 3A. What that section says, you know? If any expenditure which the SSE incurred, not paid, was allowed to the SSE as a deduction on accrual basis. Here SSE 23-24, 1,39,000 he incurred, 1,34,000 he incurred. 43B subsection H MSMED disallowance also will not apply, which means he can claim deduction on accrual basis for 23-24. Subsequently, the amount is paid in cash. Then the amount of expenditure earlier allowed, which is subsequently paid in cash is treated as income of the SSE in the year in which it is actually paid. Means here 1,34,000 is treated as income in which year? 24-25. Now we are doing for 23-24. Whereas it is treated as income over 24-25. For 23-24, no adjustment is required. Understood or not? Okay. So, Cull Industries payment 40A. Actually what are all the provisions? 43B clause H, 40A subsection 3 plus 40A subsection 3A. All these provisions we interpreted and understood. For this year there is no adjustment. 1,34,000 is treated as income in 24-25. We are doing problem for 23-24. We can claim deduction on accrual basis. 43BH also will not apply. Therefore, collectively for 23-24, no adjustment. Later it was paid in cash. Are you getting the point? Clear or not? To understand this again, watch the marathon. I clearly covered all this. Getting it? You understood now how tough September paper was. Only those who have ultimate command on taxation subject will answer this paper. Getting it? Others who moderately study income tax with important questions, all that, they will definitely fail in income tax. You're getting it? Next. Next. Mr. Raman acquired trademark on July 15th, 2023 for 2 lakh. Raman started using the trademark only from January 15th. Most important, when the trademark is started to use, January 15 means less than 180. 2 lakhs multiplied by 25% multiplied by half depreciation. 25,000 only, yes or no? Yeah, 25,000, yes or no? Minus depreciation on trademark, how much it is? 25,000, yes or no? By the way, depreciation as per books we added back. We didn't add back. Why? This 925 is already before depreciation. They said in the problem itself. Next. Mr. Raman bought a car for personal use on 12th April 2020 for 5,40,000. Personal purpose 2020 April he bought for 5,40,000. He started using this car for business purpose from 1st April 2023. Array, he started using it for business. As on the day, market value irrelevant. Any personal asset of the SSE used for business purpose, whatever actual cost incurred, that is added in the block of value. 5,40,000 will be the cost in the business. Yes or no? What is the depreciation rate for the car? 15%. So straight away 5,40,000 multiplied by 15% because it is used for business purpose. How much? 81,000 is depreciation on car. Yes or no? Depreciation on car. 81,000. Now here I want to give one clarification. You remember 43 section. Explanation. Yeah. Explanation 5 to section 43. 43 subsection 1. There is a section called 43 subsection 1. Explanation 5. If the SSE is having a building which is used for personal purpose, later the building has been brought into business purpose. Original cost of the building minus that many years. Every year 5% notional depreciation. Written down value for the opening in this year. That will be treated as actual cost of the building. Only for building notional depreciation will be allowed. Only for building notional depreciation is allowed as deduction. For car and all, any other personal asset if you bring into business. In the business you are bringing means you need to add it in the block. Some asset, my personal asset I brought into business. Means it's a depreciable asset I brought into business. Capital added. Block I should add this asset. At what value? Actual cost. What is actual cost definition? 43 subsection 1 talks about actual cost. What is actual cost? The price at which you paid. Price I paid is 5,40,000 motor car. I added into block motor car for 5,40,000. Opening value 5,40,000. Depreciation more than 180 days. 15%. Understood or not? Suppose if at all it is not car, it is building. Then what I will do, you know? From 2020-21 itself, 5% depreciation I will reduce. Notionally. 1/4/2023, I will calculate written down value notional. That will be treated as cost. And in this year, 10% will be applied. I told you the alternative also, which is not there in the question. Clear? For this depreciation on car, you understood? At what price he purchased? 5,40,000. that is brought into business. 15%. Genuine. Fair market value of the car on the date on which you brought into business doesn't matter. Doesn't matter, irrelevant. This point we will be discussing in 32 depreciation in depth. In fact, this example itself is there. This clear example itself is there in the PGBP also. Same example is there. Car brought into business. In ISA study material it is there. Getting it? Next. He incurred 2,50,000 on purchase of new machinery to be used in production for spare parts on May 15th. 2,50,000 he purchased a new machine on May 15th. When it was put to use, they didn't give. So we assume that the same date. So 2,50,000 multiplied by 15%. How much is the depreciation on machinery? 30? 37. Somebody. Array calculator pa. 37,500. That's it. Depreciation on machinery. How much it is? 37,500. By the way, it's a manufacturing concern. Manufacturing concern. Moreover, we are okay. First, we are computing on default tax regime. Actually, in optional tax regime, additional depreciation is there, right? 2,50,000 into 20%. How much it is? 50,000 additional. This is in optional tax regime. Somewhere else also we have seen optional. This you will not get deduction in optional tax regime. Here we disallowed. In optional tax regime we will yellow. Yes or no? So additional depreciation we will claim in optional tax regime. Correct? Next. Almost over. Then this is regarding tuition fee, ATC. Default tax regime, no deduction. Raman incurred 9,500 for in cash for preventive health checkup, whereas 5,000 for himself, 4,500 for parents, both put together 5,000 ATD. This is in default tax regime, no deduction. Donation to registered 80 GGC. Yes or no? So 20K. Total chapter 6 deduction is how much? 25 plus 5, 30 plus 20, 50,000 is the chapter 6A deduction. Interest on savings, nothing is there. That's it. So these are the adjustments. Now, what is the PGBP income? Now, 9,25,000, add 3,88,000, 33,000 plus 75,000 minus 4,20,000 minus 4 lakh plus 49,000 minus 25,000 minus 81,000 minus 37,500. 5,06,000. Perfect? Everybody. Once again you see 925 plus 388 plus 33,000 plus 75,000 minus 4,20,000 minus 4 lakh plus 49,000 minus 25,000 minus 81,000 minus 37,500. 506,500. Hey, can I proceed? Amma. Then once you see PGBP income is how much? 5,06,500. House property income 2,94,000. Short term capital gain 4 lakh. So what is the gross total income? How much it is? 5 plus 2, 7 plus 4, 11. 12 lakh. 12 lakh. That's it. This is income under default tax regime. Hey, what happened? You're all clear, right? Fine. Now we will compute normal tax regime. So same income we will take okay, minus chapter 6A 50,000 minus 35 scientific research 75 minus PGBP additional depreciation 50. Only 3 adjustments. Is there any other adjustment? What is the answer? 10,25,500. That's it. So just a minute. Hey, don't think 7 o'clock over I have to leave. Just 2-3 minutes we are about to. Okay, 5 minutes we'll be solving it. Are you clear until now? This normal tax regime? Yes. Just a minute. Is there any other adjustment we left? Nothing. Yeah, that's it. Array building written down value is there na? Always. Depreciation on building. Depreciation on building. How much is that? 8 lakhs. 80,000 na? 10%. What is the value? 4 lakh. Gross total income? 4 lakh 26,000. 11 lakh. I was thinking something is missing, like 11 lakh 20,500. We'll see. This one 11 lakh 20. This is 9 lakh. Now, by the way, what is the age of the SSE? Senior citizen. Appa, we'll compute tax also. Fast, quick. Huh? Hey, tax also is there. You see, tax also there. Where is it? Where is it gone? Tax payable also there. Okay, normal tax regime. Okay, normal tax regime, default tax regime. Normal tax regime income is how much? 945,500. Correct? Startup capital gain, everything is normal income only. No special income. Senior citizen. Yes or no? So 10,000 plus 4,45,500 into 20%. 89,000. Arre, you tell me 445,500. 89,100. Total tax is 99,100 plus 4%. Amma, okay. Then default tax regime. Senior citizen, no variation. 3 to 6 lakhs. Yes or no? 5%. 3 lakh into 5%. 15,000. 6 to 9 lakh. 10%. 30,000. 9 to 12, right? 9 to 12 means beyond 9, how much is that? 2 lakh 20. 2 lakh 20,500. Array, correct? 9 above. 2 lakh 20,000. How much it is? I forgot again. 500. Multiplied by 15%. How much it is? Actually, 15% rate is not there, I guess so. Rate is 25 is not there. 25 is not there. 20 is there, straight away 30. 30, yeah. 15, how much it is? Total 70. 4%. Amma. So we need to confirm 4 numbers. This tax, this number, correct? Amma, correct. Gross total income 11,20,500. Yeah, it's correct. Next. 81,200 also correct only, I think. 81,198 correct. Then gross total income, normal tax regime total income 945,500 correct. 945,500 correct. Tax also should be correct. No, 103,660 correct. Appa, 103,064. Easy or not? All of you? Such a complicated problem, no? It's not that easy, especially 43B subsection H, 48.3, 48.3A adjustment. Only those who remember 3A provision will do rightly this answer. If at all you did wrongly that step is wrong. PGBP calculation is wrong. Total income calculation is wrong. Tax liability calculation is wrong. Even though one step is wrong, tax everything will be gone. You will get only 4 or 5 marks. Just one step wrong, because multiple numbers will go wrong. Default tax regime answer will be wrong. Normal tax regime answer will be wrong. Tax liabilities will be wrong. Predominant your answer will be wrong. Just because one adjustment if you do wrongly. Many students that 1,34,000 is their right, 48.3 they will disallow. That's wrong. Able to understand. All of you. When I solved this for the first time itself, I got the answer. When I solved this for the first time itself, I got the answer. Actually, it was very tough. It was very tough. Getting it. One mistake what I did, in this problem, totaling mistake I did. Totally, I'll be very fast. No, sometimes I don't use calculator. I'll just totaling with my mind only. Don't do that. Use always calculator. Since I used my mind and totaled, I did a totaling mistake. Tax computation was wrong. Gross total income computation was wrong. Just because of the totaling mistake I did. Not conceptual or clerical. Understood? So always check twice the calculations. First question is over. If you're okay, I can proceed for the next question also. It's okay, fine.